tetema, 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 tetema. Oh mama, oh mama, oh mama, oh mama. Whoa, mama tetema. 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 Whoa, mama 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 tetema. Kisha kimempa. 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 Kimempa, kisha kimempa.
Okay. Sound check. 1, 2.
Thank you very much. All right. Good morning, ladies and gentlemen. Good morning, ladies and gentlemen. All right, that's 20%. I know it's a very cool Thursday morning, but I know we can do that better as well. So, good morning, ladies and gentlemen. That's better, but 40, and we're going to 100. So, I know you want us to do that better. Good morning, ladies and gentlemen. Thank you for 65%. Let's do that better as well. Good morning, ladies and gentlemen. Thank you so much for 80%. Let's give it the last try. And let's get to 100. Can we do that? Can we do that? All right. Good morning, ladies and gentlemen. Thank you very much. Do you want to give a warm welcome to the person seated beside you? A good morning to the person seated beside you. Hello, good morning. How are you doing? You know, he's trying to, So say a warm welcome, a warm good morning to the person seated beside you. You could ask for their names as well. Just interact with the person seated beside you. Have you done that? Just talk to the person. All right, you can tell them you look good, you're welcome to Alpha Crocs Real Estate Outlook Conference 2026. Have you done that? Have you done that? So please, if you're seated at the back of the hall, we have the seats in front for you. Please do well to fill up the seats right in front of you while we wait for other participants to arrive. Please, if you're at the back of the hall, do well to fill up the seats right before you while we wait for other participants, right? So we do not want to take much of your time. First, we want to apologize for starting, a bit late this morning, but we promise you that it's going to be worth your time, right? We promise that it's going to be worth your time. All right, once again, good morning, ladies and gentlemen, distinguished guests, speakers, partners, industry professionals, and real estate experts present here this morning. Good morning. On behalf of Alpha Crocs Limited, I want to extend a very warm welcome to you to Alpha Crocs Real Estate Outlook Conference 2026. Please a warm round of applause for yourselves. Yeah, thank you. Over the years, Alpha Crocs has tried to bring together industry experts, developers, and of course, investors to network, share insights, and of course, shape the future of the sector. Now, this is a very special edition. It's the 10th edition. Are you excited to be here? To be at the 10th edition of this auspicious occasion? Are you excited to be at the 10th edition of this auspicious occasion? Right, it's a very, very special edition, I beg your pardon. It's a landmark one, if I might say, right? AREO has been fostering meaningful discussions among real estate stakeholders across all sectors, providing valuable guidance for a year of growth and innovation in the industry. And so, this year's edition that has been themed amplifying resilience in the real estate industry in a disrupted global economy is not going to be an exception. It's going to be a very impactful, event where we'll have seasoned panelists that will be discussing salient points regarding the theme of this event. So we want to assure you that you're in for an impactful day. Are you not? Are you not? All right. So with no further ado, to set the tone of today's event, right, we would like to have the welcome address right about now. And to do that for us, right, is none other than the convener of AREO. But before that, I would like to also introduce somebody, right, that will be moderating and hosting this event this morning. She is a seasoned, event prepare, also known as master ceremonies, professional broadcaster, television presenter, and of course, a brokerage journalist. Her name is Praise Ganuyu, and she's standing right before you. I thought, it's supposed to, this is a round of applause for myself. Thank you. Thank you. I am delighted and honored to be a master of ceremonies this morning through to afternoon, and I want to assure you that you're in safe hands. Don't worry, you're going to have a very good day today. Thank you very much. All right, so let's go straight to welcome address. With no further ado, we want to set the tone of today's event, let you know why we are here, what the theme is all about, what AfroCrux is trying to achieve, especially in the 10th edition. And like I already said, to do that for us is none other than the convener of our CEO of AfroCrux Limited. Permit me to the words of the conqueror, the emperor. You know, ladies and gentlemen, please with a warm round of applause, please make welcome the CEO of AfroCrux Limited, Toby Adama. I know you can do that better and louder for him. Thank you.
Thank you. Good morning, ladies and gentlemen. I'm happy to see familiar faces and new faces. Thank you for coming to this year's AfroCrux Real Estate Outlook Conference. We started this program or initiative 10 years ago, and one of the reasons why we started is that we realized that a lot of real estate professionals, they work in silos. We don't collaborate, and at the end of the day, there are opportunities that are lost when we don't communicate, and we don't even know new innovations in the industry. So since we started, one of our key motivations is to always bring not just real estate professionals together, but bring people from various industries, especially finance, because real estate is actually a finance game, where we can discuss issues and see ways where we can progress and also help the nation. Once again, I want to thank everybody for coming. This conference is not a mistake. It's very intentional, and we sort of open it up to people to attend so that they can get some insights and knowledge and plan their year. I want to take this opportunity to thank my speakers. Thank you for taking out time from your busy schedules to be with us here today. We do not take it for granted, because you guys are not paying for your time. You're just adding value to the industry, and we're really, really grateful. I want to thank our sponsors, especially the ones that have been with us from the very first one, and that's El Sabio Development and Parkway Homes. This program is not possible without them. And once again, I want to thank the participants as well, those that are online and those that are here physically. I hope that today's deliberation would have a meaningful impact in your life. Please do network, ask questions, and let's make it a great year. Thank you very much.
Please do that better and louder for Mr. Toby Adama. That's the CEO of AfroCrux Limited. Thank you very much, sir, for that warm welcome. All right, we already said we don't want to take much of your time this morning. We want to get straight to the business of the day, and then so that I can have other things to do, this morning. All right, now it's time to look at the current economy with us as less professionals and investors, and how we can see growth in our companies this year. All right, so this morning we are delighted to have the Deputy Director of the Estate Department of Ministry of Housing, Mrs. Ayodeji Balobo, ably represented by Mayowa. I mixed it up. All right, so you're able to represent by. Okay. Oh, I beg your pardon. I want to apologize for that. To take the outlook, economic outlook this morning, we have Mr. Right, for sound and apathetic male Mayowa. Come up on stage to give us the economic outlook for 2026.
Hi everyone, good morning, and it's a great pleasure to be here to actually present our economic outlook from Kojo's Capital specifically. we see the economy in 20, and we are coming from 2025, right? And what do we expect to see in 2026? And definitely, Nigeria is not in isolation. Would also want to see how the global economy is also going to affect us in Nigeria. So this presentation would have two segments specifically. The first will be on the global economy, and then we'll discuss about the domestic economy. I'm sure you're going to gain some, wonderful insights, even for this presentation. Next slide, please. So, actually, we've titled our outlook for 2026. Primarily, we said beyond building momentum beyond the rebound. And this is because looking at it from the Nigerian perspective, we've had years of serious pressure, disruption, primarily given the reforms that were actually implemented. And then, we saw the pain specifically, right? Subsidy, exchange rate devaluation, and then, that led to, spike in inflationary pressures, that caused disposable income to actually, fall significantly. And then, we had that year. But then we saw 2025 where, this reform started to yield gains. We saw Naira appreciate, and, even the growth in the economy started to gradually improve, even though we know that, the mere men outside are yet to still feel the impact of, the improved growth that we saw. But then we see 2026 as a year of, beyond the rebound. So we've recovered partially to a very large extent. We've recovered from that shock because of the reforms. But then we are going to a year where gradually we begin to see momentum generally for the economy. And like I mentioned, that Nigeria is not in isolation. And so we have to discuss what we expect for the global economy in 2026. So, 2025 for the global economy was a rough year. And, I like to say that in a Trump era, you would not expect less, right? Because of his person, at least for some time. So we saw tariffs, which pretty much has been what people were actually expected. People expected tariffs in 2025, but then it was quite loud, particularly in April, as he actually, mentioned a lot of, increased tariffs for basically all countries that, U.S. imports from. But then for some countries, it was quite high. But then we saw market reaction that sort of curb, the full implementation of that tariffs. And then we saw how there was a scale back, negotiations happened, and then that, sort of reduced the impact on general economy in 2025. And so you can go back to the previous slide. So, and we saw that at the end of the day, even though IMF initially, when that happened, had reviewed global growth, thinking that would see a sharp or a hard landing, right? But then the negotiations that we saw, even in the later part of the year, reduced the impact of the shock from tariffs. So we rather just saw a steady growth. And then we're also seeing improving investment and productivity from AI, particularly in the US, and, key advanced economy. And that is also to some extent, supporting productivity and, still, supporting resilience in the global economy. So for 2026, we expect, initially, I'd say, you can move to the next slide now. Initially, we had expected that tensions would ease in 2026. Tariffs have, been scaled back from, the highs that we saw in April. But then, like I mentioned, you would not expect anything less in the Trump era. It would always, come up with, one thing or the other that likely triggers the market and even the economy generally. So, but then, we saw, the Venezuela Act, where the U.S. president, took the president of Venezuela, and we saw those disruption, and then there were, fears that them taking the industry or the oil sector would, push oil output significantly and then would cause oil prices to fall. But then we actually highlighted that because the Venezuela oil infrastructure, is very, very weak. There have been sanctions on its oil for a very long time, which has actually impeded production. And then, if to be able to raise oil production strongly in 2026, that will be, not entirely feasible because a lot of investments will have to go into those infrastructure to actually, yield stronger outputs for oil. And, we actually, because of that, now retained our outlook for oil because we do not expect to see significant supply from Venezuela even after the capture. And, all other, disruptions also happened. But then we saw that market reaction that, to a very large extent, still allowed the U.S. president to scale back on its foreign policy action. We saw the threats towards Greenland, but then because, they were pushed back from the European Union, and then, we saw Trump at the end of the year to calm down. And to a very large extent, we think that all of this disruption we are seeing would likely not cause significant impact on growth because, like I mentioned, there is always that reaction from market that tends to, give the president or even other countries some pushback with regards to, or that tends to make them, step back to see that what they have put out there is actually very dangerous for the economy. And then that sort of put a check to excessive actions that might actually disrupt the global economy generally. And so we are still expecting to see, some steady growth. So we will just be in a fragile global environment rather than a hard landing as a result of these actions that we're seeing and disruptions. So why we'll be seeing a fragile economy is that things like uncertainty would persist. There will also still be trade fragmentation because we're still seeing tariffs, right? Even though, it's not as high as what Trump mentioned in April, but then the tariffs are still there and, will still continue to be an impediment for trade specifically. So, but then to a very large extent, AI, like I mentioned, also we are seeing expansion in AI investment that is also supporting productivity in the global economy, and to some extent, providing partially offsetting the disruption that we're seeing with trade, for economies. And then monetary easing is likely to continue in 2026. We've started seeing global monetary easing, particularly after we saw inflation started to decline globally, and then, causing central banks to ease monetary policy. And definitely, particularly in the advanced economy, where when monetary interest rates actually fall, we tend to see improved economic activities because it reflects in the domestic banks, interest rates fall, and then we see better activities and even improved consumption. So moderating inflation, further monetary easing is also partially offsetting that impacts from tariffs that are actually, slowing growth in the economy. So altogether, this is IMF estimates, and the IMF is actually expecting growth to actually grow, or global economy to actually grow at a steady pace of about 3.3% year on year in 2026, which is just the same pace of growth estimated for 2025. And then we'll see advanced economy grow by 1.8% year on year. This will be led primarily by the US. Like I mentioned, you see strong AI productivity, and then gradual pace of monetary easing also supporting economic activities there. For emerging markets and developing economies, we see a slowdown to about 4.2% year on year. This will be primarily led by China, in as much as one, there's the aspect of its exports, because before the tariffs, the US was its primarily the China actually exports a large part of its goods to US, but after the the tariffs, we've seen a gradual decline. But then, even from last year, it was significantly low. But then we see China now diverting most of its exports to Europe, to other countries now, to be able to offset that impact from lower exports to US. So to some extent, that is actually providing some support for its economy. But then domestic demand, because of its real estate crisis, is still quite subdued. And so that is actually going to continue limiting growth in China in 2026. But for SSA, we are seeing reforms. And, you know, we see there's been reforms in Ghana, there's been reforms in definitely Nigeria, some in South Africa, Kenya. So we are seeing gains from that reforms in SSA. And that is actually, we see that actually supporting growth also for Sub-Saharan Africa in 2026. So next slide. So for crude oil, we're going to crude oil discussion now. We saw a volatile period last year. The tariffs initially, spoken about or mentioned in April, led to fear of possible disruption to global growth, and then we saw oil prices plunge. But then we also saw reduction in the OPEC themselves reducing their supply to be able to influence prices, but then just only a gradual pace of that reduction was done in 2025. So to some extent, all of those things just contributed to oil prices remaining elevated. So we saw, but then this was a moderation from 2024 now. We saw a moderation in prices relative to 2024, and that's because of the expected slowdown in global demand. And then moving into 2026, we are expecting to see, specifically, we expect oil prices to average about $58 per barrel. And this is because we expect, definitely that's lower than 2025 2025 average. And that's because we expect supply to increase, and this will primarily come from non-OPEC producers. I think we're expecting a growth of about 1.5% in supply from non-OPEC producers, and then OPEC producers are gradually slowing the pace of their cuts, right? And so that definitely would improve oil supply from OPEC themselves, but we're estimating about 1% growth from last year. And so because of that, and then we are expecting global demand to just remain at a steady pace. And so given the steady pace of global oil demand, and then a much more better supply, we think that oil prices will moderate. But then we would like to also cite that the US-Iran tensions are actually, providing a material upside to our estimates. But, it's still quite early to... we are still watching how things play there, before we actually revise our estimates. So currently, we still expect that the major factors that will drive oil prices downward is, improved supply amid a steady growth of oil demand, basically. So next slide. So now I'll be going to speak specifically about Nigeria, and definitely I would also try to link my discussions around the global and how, it affects us here in Nigeria. So specifically, I would start with the GDP growth. Like I mentioned, I tried to explain very briefly that we've been we've had serious shocks that, pushed down growth in 2020, even 2022, 2023, 2024. But then we saw that gradual improvement in 2025 as we saw a moderation in inflation, even though there was, I'll speak better to that, there was some adjustment within the numbers were adjusted. That's the inflation numbers from MBS was adjusted to because of the rebasing of the CPI basket. But then, irrespective of that downward adjustment that we saw, prices were actually increasing at a slower pace. So not as much as we saw in periods of exchange rate depreciation, sharp exchange rate depreciation, flooding that happened significantly in 2024. So 2025 was pretty much a better year I would say, I know sometimes when we say this as economists outside, we try to watch our words because, the ordinary man is yet to really feel the impact, right? But it's a gradual pace. And, when it comes to our ordinary man feeling the impact, it's going to take years of sustained growth for an ordinary man to actually feel the impact of the economy, of the growth in the economy. But then we are seeing gradual improvement. And so we saw expansion in the oil sector and in the non-oil sector. For the oil sector, we saw stronger oil production. We've seen improved security of oil assets in the oil sector. The federal government has, increased its expenditure for, oil security, and that is actually. And then we also saw increased production from local producers now. There was that transfer of oil assets from international oil companies to local players. I think the likes of Seplat, the likes of Aradel, and Oando. We saw that transaction in, I think, 2024 ending, and because of the better interest that we saw in 2025, that actually supported crude oil production. So we grew from about 1.55 million barrels per day in 2024 to 1.65 or 67 million barrels per day in 2025. So that supported growth in the oil sector. Then for the non-oil sector, like I mentioned, slower inflationary pressures, particularly compared to previous years, contributed to better business confidence in the economy. And then services sector also picked up. Even we saw slight improvements in trade. I think we also saw improvements in financial sector, primarily because of the high interest rate environment that actually supported growth in the finance sector specifically. So we saw about 3.6% year-on-year growth in the 9 months of 2025. That's the data we have. And then for the oil sector, we saw about 9.4% year-on-year growth, which is stronger than about 5% or 6% average growth in 2024. So now, what do we expect in 2026? Like I mentioned again, that we expect to see the economy gradually build momentum beyond the rebound. So, I'm going to speak more in the other segments, but then we are, in terms of macroeconomic conditions that would support growth, we expect to see further moderation in inflation. To a very large extent, exchange rates contributes significantly to inflation. So when we see sharp depreciation, and when it contributes to inflation, it filters into growth also. So when we see sharp exchange rate depreciation, just expect to see sharp increases in prices. Not only that because we import, but there's also the inflation expectation that guides prices. Like, for example, when you go out there and the naira is actually depreciating and people feel it, you tend to see people blame naira for, like, for example, maybe pepper, buying pepper, and they just tell you that the naira is depreciating and all of that. So when you see significant depreciation in naira, there's that sentiment it gives to everybody. So people begins to just adjust prices. So in as much as prices of imports would increase because the value of your currency has depreciated, then it also contributes to sentiment. People just tend to increase prices because of that depreciation, just to reflect everywhere. So, but then this year we're expecting even appreciation. We saw appreciation last year. I think about 7% 7% year-to-date appreciation in 2025. And then we expect to see further appreciation. I'll speak to that in the exchange rate segment. And definitely this is positive for businesses, right? Like somebody usually say that when exchange rate is pretty much stable, it supports business confidence in that they are able to plan well. They're able to plan well and then, plan their income. And then definitely they do not have to increase prices, so significantly. And when this happens, that supports consumer spending. Because when prices increase at a very faster pace, you tend to buy less of the goods, right? And then that results into lower income for producers generally. So that's one factor that we expect to support growth. And then we expect to see better financial easing. We've had episodes of monetary policy tightening, especially when the new administration came in, that's CADO. So we saw significant increase in the monetary policy to levels that we've not seen in years, right? And that was for a reason. I know some people don't agree here why they should do that, but that was for a very particular reason. I'll speak to that also in the exchange rate segment. But then, we saw that happen. But then now that inflation is moderating, we expect to see faster pace of easing, which is supportive for growth because interest rates will moderate and then borrowing costs will reduce. And then it makes it a little bit better for business to expand better because of low borrowing costs, and see that positive for growth. For agricultural sector, I think the gains primarily would come from reduced input prices. The livestock sector, we've had issues around high prices of high input costs. We see that as a significant impediment for the agricultural sector. And given that we expect the exchange rate to appreciate, because some of those inputs are actually imported, given that we expect the exchange rate to appreciate, they would actually buy these things at much more lower cost, which would, that's one, supports, expansion in production. But then there's still the issue of persistent insecurity and, flooding also. Sometimes it's not easy to be able to, guess if there's going to be significant flooding or if it's going to be better. It just happens. So it's just one of the risks we usually estimate even while projecting for the agricultural sector. So why we expect an improvement from what I mentioned, these structural problems will still continue to gap gains in the agricultural sector. Manufacturing sector, I think I already mentioned. Credit expansion is positive, Naira appreciation. Then oil refining expansion, we saw that last year, and then Dangote is, planning to also expand its refining even in 2026, and we think that is so. There are also other refining other local refineries that are actually coming in place, and that would also increase the supply. We are still at levels where we need increased supply of refined petroleum, and then this would not just be sold in Nigeria. We also expect to see exports of this refined petroleum, and that is actually positive for growth in 2026. So then for the services sector, after the, I just want to say that, after the MBS actually rebased the GDP, they realized that real estate actually contributes the third largest to the economy. Initially, the sixth contributor to GDP overall, but after rebasing, so that it came in third, and that's because of their ability to be able to capture a large portion of the informal sector in the real estate segment. And so we see after that rebasing, we saw that real estate came in as the third contributor to GDP. So whatever happens in the real estate sector, to a very large extent, contributes to overall economic growth in 2026. And so specifically, or going to other sectors like trade, gradual improvements in consumption. We see that expanding trade. We try to check the correlation between, consumption definitely and trade, and definitely there's a strong consumption. There's a strong correlation with that. So if disposable income begins to improve as a result of falling inflationary pressures, definitely that should support growth for the trade sector. But then it's still going to be gradual because we've had years of consumers being battered, so to speak, right? So it's just going to come in at a gradual pace even in 2026, and that will support growth. And then for the ICT sector, we see the increased broadband penetration actually contributing to a strong demand for ICT for services, and we see that contributing to overall growth because we've seen the rising need for digital tools. Government is increasingly using digital tools. Companies definitely, and so we see that expansion. And then, we've seen arts and entertainment, social media, contributing to strong demand for the telco sector. And so we see that actually supporting growth. So broadband penetration, that means, better increased people buying, SIMs and then buying smartphones to browse. That contributes to, growth for the ICT sector. Then for the real estate sector, we see possible growth, right? And that's what we are expecting to stem from the MOFI Real Estate Investment Fund. The government has contributed about 250 billion to that fund, and then capital bodies are also supposed to contribute to that fund, whereby they are able to provide sizable access or there's land bottlenecks around land acquisition. We see all of this still remaining an impediment for stronger expansion. So in as much as we see better access to funds, to real estate funds because of that development, we still have that structural problem that, the government would have to really address and, ensure a stronger expansion in the real estate. For transportation, we are seeing increased a faster pace of PPP projects. I think about more than 10 PPP projects were actually approved by the president earlier this year, and some of them include maritime, maritime specifically. And when those projects start, and then we see stronger activities from there, we see that actually contribute, because transportation involves water transportation, air transportation, storage, road transportation, definitely. So we see that, and then improved supply of refined petroleum. I think I boarded a vehicle that was early this year, and one of the person there was saying that this is the first time they would be in a festive environment, and then prices, there was no scarcity of fuel, right? And he was saying with so much joy. I was wondering that, prices are high compared to those times, but then, it just shows that the better supply of the refined petroleum is even more calming than, when you have lower prices of PMS, and then, the supply is not there. So we see that improved supply of refined petroleum also contributing to the transportation sector. Since 2025, when we've seen that increased supply and persistent supply, we've seen transportation sector grow significantly, rebound. So to a very large extent, subsidy is, a downside for growth in the transportation sector. And so, but then given that better supply now, we've seen improved growth, and we think that would continue even in 2026. And then for finance, specifically, we'd see improved, we expect banks to expand their borrowing or expand their credits to consumers. We realize that in periods of better macroeconomic condition, banks tend to increase their loans to consumers. Why? Because there's that better or reduced risk or reduced credit risk, right, because of better macroeconomic environment. So, but then during periods of weak economic environment, even though there's expansion in liquidity, they most likely do not, engage in much credits to the economy specifically. So now that we have lower inflationary pressures, and then we expect the economy to do better, we would likely see credit expansion. They will be encouraged to, give out loans to consumers and then even to businesses. And so we see that also a positive for the finance sector. For the insurance sector, we know about the Insurance Act, and we've seen they've been asked to recapitalize, and we see that giving them stronger incentive to do more business, to expand, and then, there are compulsory insurance laws that government should, people should actually ensure that they take this insurance this premium specifically, and we see that that's compulsory compulsory act for people to actually take some. So I think primarily in motor and insurance, there are some insurance products that are actually required for for people to actually take, and we see that also contributing to growth there. So overall, we expect that the economy will expand at about 4.2% in 2026, which is stronger than our estimated growth of about 3.85 in 2025. And we see more upsides, right? If we see stronger crude oil production in 2026, that will contribute to stronger growth. The IMF specifically is estimating about 4.4%, but then our own is a little bit cautious, but we see upsides. And then we've seen tax reform. If the tax reform is implemented in such a way that it is pro-growth, there are segments in the tax reform that requires exemptions for slow businesses, and then we've seen the implementation of the rent relief rights for many salaries. So we see that to some extent, supporting consumption, basically, or better income. So if these tax reforms are implemented in such a way that it is pro-growth, where the emphasis on exemptions are placed well, then that would contribute to that would be an upside to our growth. If we see stronger than expected naira appreciation, it will contribute positively to our growth estimate. But then there are also downsides. There could be social pushback from the tax reforms, maybe in a situation whereby implementation is emphasizing primarily on driving government revenue rather than supporting general economic activities. Then that can actually affect the economy generally and business uncertainty. And then if we see pre-election activities, we see that the government is sort of slowing down on reforms or being negligent about policies, then as a result of pre-election activities, then that could actually also contribute lower to growth in 2026. And then adverse global shock. If the disruptions that we're seeing leads to severe disruption in economic activities generally, then that would also affect Nigeria and then would also contribute to lower growth in 2026. So now speaking specifically to inflation, we can move to the next slide. So yeah, like I mentioned, 2025 was a year where we began to see moderation in inflationary pressures. So even though, like I mentioned, that the MBS actually rebased the CPI, and we saw a significant drop in inflation, in the inflation numbers, which to some extent we can't compare 2024 inflation numbers to 2025 and gladly say that inflation moderated, right? Because it's a different base year, because the base year was adjusted to 2024. Initially, the base year was 2009, so that artificially created a drop in inflation. But then everybody here in this room knows that things were actually different from previous years. I remember then going to the market every day, you would hear that there's an increase in price of whatever you're buying every day. Like it was literally every day. I think 2024 was even the worst year, right? But then in 2025, prices were pretty much stable in 2020, particularly for food prices. Core prices like non-food prices were still quite sticky. That takes a little bit to adjust because of other structural factors that contribute to prices there. So, but then primarily for food, prices were pretty much stable, which definitely points to lower inflationary pressures. And why we saw that is because we saw Naira appreciate. Like I mentioned, we had about 7% Naira appreciation. And then we saw better agricultural outputs. We saw lower flooding activities, unlike 2024, where we saw significant disruption of agricultural produce because of high flooding activities during that period. But in 2025, flooding was relatively lower than 2024. And so we saw better outputs also contribute. And then PMS prices on a year-on-year basis actually dropped. in 2025, and definitely that was positive. So it didn't spur too much price increases in transportation, right, or transport costs, right, because of the stable PMS prices. So all those factors together contributed to moderation in inflationary pressures. What do we see in 2026? We expect that moderation to continue further. And that's because we expect to see Naira appreciation again. I mentioned that. We are expecting, now, so our estimates are around official rates. I know a lot of us here are familiar with the parallel market rates, but now we've seen improved market structure in the foreign exchange market, such that the official market now is like the signaling to the parallel market, unlike previous years where the parallel market was what people relied on primarily for business estimates. But then we are seeing that the official market controls now begins to paint a picture for the parallel markets, and I'll tell you why I say that. We've seen improved liquidity, FX liquidity. I think I'm joining it together now because I'll discuss that extensively in the exchange rate segment. We've seen improved FX liquidity, and then that is even coming in stronger in 2026, and that we expect that to actually cause the Naira to appreciate. In fact, as we speak, we've seen appreciation. I believe everybody knows there's been strong appreciation in the Naira. I think at the start of the year, we started at 1,430, and now in the official markets about 1,360, right? Yesterday it closed at 1,360. Yesterday, that's a strong appreciation. So while we may not see it stay around that level, we might see it go down, but then we expect it to trade within the band of 1,350, 1,450, even in 2026. And then another thing that we expect that would, and like I mentioned, the exchange rate is very, very key to inflation in Nigeria, because to a very large extent, some of our commodities are still imported. And then it also contributes to sentiments in the market. When exchange rate is depreciating, everybody just tends to raise their prices, because everybody just feel prices should just have to increase because the Naira is depreciating, even though we see higher import costs, but that's also a factor. And then for PMS price, we expect to see further moderation on an average, right? We're estimating an average of about 817.3 Naira per litre in 2026. And that is positive, right? Because since there are stable energy prices, transportation costs is not expected to actually skyrocket like we saw in 2024 and all that. So prices around transportation most likely remain, pretty much stable, except for volatile periods like, festive movement and all of that. Also, we expect stable outputs of agricultural produce, expect to see stable outputs. Like I already mentioned that in the GDP segment, where we expect an gradual expansion in the agricultural sector. And so because of that, we expect inflation, we'll estimate inflation to average 14%, and then reach 12.7% by year end. But then we also like to discuss other scenarios that could likely push our numbers either upwards or downwards, or cause an upside or downside risk to our number. So in a best case scenario where we see stronger than what we are expecting in terms of appreciation in the Naira, for example, maybe Naira trading within the band of 1,250 and 1,350 this year, anything can happen, right? So in that case, we might see even sharper disinflationary trend in 2026. And then, if we see, definitely, if Naira appreciate, that tends to affect even PMS prices, because even though Dangote is buying crude oil from the NNPC, it's still calculated. It's buying it from using Naira, but then it's still based on the dollar estimate of Naira. So if exchange rate depreciates, it's still going to affect the cost of crude oil that it buys from NNPC. So, and then if oil prices, so if Naira appreciates, it is positive for prices of PMS and even other refined petroleum products. And then if Naira appreciate, that is positive. And if we see even sharper fall in oil prices, that might actually also contribute to lower PMS prices and overall better disinflationary trend. And in a worst case scenario where there's severe global disruption to the economy, for example, the global disruption where Trump was talking about acquiring Greenland, a lot of things happen in global economy, and then there's that duty from foreign investors to take out their money from Nigeria. That will cause Naira to depreciate further. And then maybe a sharp decline in oil prices would also influence a moderation in FX flows to the FX reserves, and then even investors will be duty, right? And because they feel like, okay, your current account balances or your trade balance is going to deteriorate, and so it's better we take out our money now before. So that would come into effect. Investors, foreign investors, G3, and then lower FX reserves to lower FX inflows to the external reserves, and that could cause the Naira to depreciate. And then if we see increased insecurity problems, that definitely is negative for the agricultural sector, and then farmers will not be able to go to their farms, and then that will lead to lower outputs. That can cause inflation to increase above our own estimates. So, but altogether, we still expect to see a downward trend in the inflationary numbers, particularly in 2026. So moving to the monetary policy aspect, and I would like to say that primarily the monetary policy, you can change the slides, the monetary policy aspect, for us here in the real estate segment, just determine how much funds that would be available for you to be able to borrow, right? So previously, we've seen, like I mentioned, we've seen the MPC actually raise interest rates starting primarily from 2024. We started before 2024, but the increases were more pronounced in 2024. And the MPC did that because, number one, we're already in a very high inflationary environment. And to a very large extent, money supply was a significant contributor to inflation at that point in time. People tend to say that inflation is not primarily money supply driven because, how many of us have so much money to buy? But then what we see is that when there's high money supply like that, people tend to, especially in an inflationary environment, people tend to want to buy dollars, right? Because you are not getting better satisfaction from the Naira you're holding. So you prefer to buy dollars and keep yourself safe. And another thing is you're not being compensated by the bank in terms of interest rates to deposit your money. So if interest rates is actually low, it encourages people to look for more value by investing in dollars. But then if you increase interest rates significantly, you are compensating me for inflation, and then I'd rather now invest in Naira. So that's one of the reasons why we saw that action from the MPC to actually raise rates, and then to also attract foreign portfolio investors. And that's what we saw also. We saw that improvement in 2024. It was quite significant in 2025. Foreign portfolio investors came in large amounts because of the attractive interest rates on Naira assets. And so that is like a big factor that contributed to Naira appreciation. And so, but now that inflation is moderating, we are now seeing them gradually slow or reduce their monetary policy rates. Last year, it was about just 50 bips cuts. But this year, we expect to see stronger monetary policy cuts. We are estimating about 300 in our base case scenario where inflation moderates to about an average of 14%. We're expecting the MPC to cut rates by about 300 bips in 2026. And currently, the monetary policy rate stands at 27%. So a 300 bips reduction is about 24%. And, somebody will ask me that, oh, is that a reduction? Well, yes, it is. But then we also see them expanding monetary conditions. For example, CRR, we expect them to also cut CRR rates that would actually encourage banks to, give out more loans to the economy. And so all of these factors would, contribute to, like I mentioned, stronger growth. But then the slow to some extent measured pace of easing is still because foreign portfolio investors still contribute a large amount to total FX liquidity in Nigeria currently. And so they don't want to chase them away by significantly lowering interest rates. So that's why the MPC will still most likely keep interest rate at levels that will still continue to encourage foreign portfolio investments even into Nigeria. So moving further to the next slide, which speaks about the exchange rate segment, and I think I've said some things around it. I'll just throw a little bit more light. Like I said, Naira appreciated last year, and like I mentioned, to a very large extent, foreign portfolio investors actually contributed to the strong increased liquidity that we saw in 2025. Then we also saw strong external reserves expansion, and we about 11.3% year-to-date accretion in the external reserve, and this was primarily due to better oil inflows, and then about stronger. The CBN also did they purchased FX from FPIs too. That also contributed to the accretion in the FX reserves, and so. That was, all the factors that drove the Naira appreciation in 2025. What do we see in 2026? Like I mentioned, we expect to see further appreciation, right? For our trade balance, which is like your imports and exports, we have strong surplus. I think last year we would have about $17 billion $17 billion of trade surplus. That means our value of exports is significantly higher than what we are importing. And what is contributing to that? Number one, crude oil production, a stronger crude oil production, still fair oil prices, and we have export of refined petroleum from Dangote refinery contributing to our exports. And then we are seeing higher gas exports too. NNPC is pushing efforts to increase gas, and that is also supported. So, and then we've also seen moderation in imports of refined petroleum. And so altogether, those factors are contributing to a good trade balance. And then we expect that trend to continue in 2026. So in as much as we are seeing moderation in oil prices, we expect to see expansion in crude oil production, which will partially offset that impact. And then, we expect to see further moderation in imports too, right? It might be slow because, there's that resistance from marketers to want to also still import petroleum, so that Dangote doesn't become the sole, there's that discussion around there. I don't want to go in. But then we still see a gradual moderation. So we also see strong reserves, right? We see, and then the U.S. Fed is also expected to slow monetary policy, particularly in the second half of the year, probably when tensions ease, and then we're going to see U.S. inflation moderate further. We expect to see more monetary policy easing. And when there is moderation in U.S. monetary policy, foreign investments tend to come into emerging markets to be able to invest more for better yields. And that is positive for Nigeria because our yields will most likely still remain elevated even in 2026. So I think finally for the fiscal side of things, we've seen 2026 proposed budgets. You can move the slide. We've seen 2026 proposed budgets, right? And we've seen how strong the budget is. It's about, I think, 56 trillion. Please move the slide so I'll just get the numbers. About 56 trillion for total expenditure in 2020. Yeah, in 2026, 58 trillion, right? But then we're expecting that they would spend less. We've in as much as they increase their expenditure, when it comes to capital expenditure, they always underperform. And so they build high goal, but at the end of the day, they underperform. So we expect to see them spend less, and that will stem primarily from capital expenditure. But this does not negate the fact that we would see stronger fiscal deficits. We've heard how much, we've heard about borrowing, right? And so we expect to see them borrow significantly also in fact, they've started borrowing significantly already, even though the 2026 budget is yet to be approved. So, but then we expect to see them borrow more because of high deficit. So even though we are seeing improvement in their revenue coming from better oil revenue, the subsidy has been removed, so that has been positive for them. And then even though we are seeing some support from tax reforms, primarily due to better compliance, right, it's still not enough considering the expenditure that they have. And so that will still lead to large fiscal deficit and even large borrowing for 2026. So thank you very much for, listening. Thank you.
Please, a warm, loud round of applause for Esther Mayowa. I know you can do that better and louder. All right, that's from Codros Asset Management Limited. Representing Mr. Gbolawa, Please, another warm round of applause for her, please. I think all in all, what you're trying to say is 2026 looks promising, right? I think that's the good news we want to hear, that 2026 looks promising. 2025 was an improvement of 2024, and then we hope that 2026 also is going to look good, or is already looking good. All right, please, another one round of applause for Esther Mayowa. Thank you for that insightful, detailed output presentation. All right, we are about starting the first panel session, but before we do that, we are so honored in our midst this morning to have the Commissioner of Housing in Lagos State, Honorable Moruf Akinderu Fatai, ably represented by Mrs. Ayodeji Balogun. I know you can do that better. A loud, warm round of applause for her. Thank you very much, ma, for being here. We truly, deeply honor you. Thank you for making our time to be here. All right, are you ready for the first panel session? Are you ready for the first panel session? All right. This morning, I'm delighted to welcome the first panelist for this first panel session at this auspicious occasion. All right. We are delighted this morning to have the senior partner at Olawale Jordan Company, a firm of estate surveyors and valuers. He was formerly the head of origination and brokerage at North Court Real Estate, also formerly the chief operating officer at Brokerfield Real Estate Services Limited. All right, ladies and gentlemen, our first panelist on this first panel session. Please, a warm round of applause for Mr. Akin Okpatola as he comes up stage for this first panel session. Please do that louder and better for him, please. Thank you. All right. We are also delighted to have on this first panel session the Communications and Marketing Strategies Lead for Nigeria's flagship Smart City project, Eco Atlantic. She's been instrumental in positioning Eco Atlantic as a benchmark for large-scale urban development in Africa. Ladies and gentlemen, are you ready for our next panelist this morning? Please, a warm round of applause for Mrs. Joanna Fabiko as she comes up stage as the next panelist. All right. We are also delighted to have on the first panel session this morning a manager of home loans at Stanbic IBTC Bank this morning. Ladies and gentlemen, please a warm round of applause for Mr. Nondada as he comes up stage. Please do that better for him. All right. The last panelist for this first panel session is none other than the convener of Arthur Crooks Real Estate Outlook Conference 2026, the CEO of Arthur Crooks Limited, Mr. Toby Adama. Please, a resounding applause for him as he comes up stage. I would also like to welcome the moderator for this panel session, a seasoned broadcaster. I've said that already. Please, a warm round of applause for me. Thank you very much. I'm delighted to be hosting this panel session this morning. And we do not want to take much of your time like we already said, right? This first panel session we'll be looking at resilience in the real estate industry amidst global and local disruption. You would agree with me that over the years, the real estate industry has faced and is still facing challenges. Would you agree with me? Do you want to give me some of the challenges that we've been facing in the industry? Anybody? You can just speak from wherever you are. Anybody? If you say that we are not facing challenges, maybe we should not have this panel session. Inflation, thank you very much. Anybody again? The challenges we've been facing in the real estate industry. Inflation also, cost spikes. Funding, Esther Mayowa talked about insecurities as well, documentation, all of that, and of course, insecurities and several other challenges that we've been facing. And it has led to shutdown of quite a number of real estate industries, or, they are not functioning as they should over the years. But like, AfroCrux, Real Estate Outlook Conference, we want to target and have discussions on these challenges or anything that is happening in the real estate industry and how we can target these challenges and how we can also thrive amidst these challenges. All right, so that's what we'll be talking about this morning. Please, a warm round of applause for my panelists. Thank you very much for joining me this morning. I want to believe we have mics in between. Is there a mic over there? Okay, awesome. So we have one. All right. So where should I start from this morning? I think I'll just start from my from my left, right, Miss Joanna. So while I was introducing you, I said that you've been instrumental in positioning Eco-Atlantic. Please, the mic for her. Yeah, thank you. You've been instrumental in positioning Eco-Atlantic as a benchmark for large-scale urban development in Africa, and you're also the communications and marketing strategy lead for this project. We want to know how you've been able to do that over the years.
Okay, thank you very much for that question.
You're welcome.
So I would say, to start with, when you talk about Eco-Atlantic, you have to talk about the history. And people forget so easily. So we have a lot of criticisms of the project over the years because people forget the history of what Eco-Atlantic has actually solved. So initially we had Bar Beach and we lost that land to coastal erosion. So the Lagos State had tried several solutions before our company came in and created a final and permanent solution to restore land that was lost. So unlike other projects, we're not creating new land. We're restoring what was lost and securing it for the future. So once you understand the history of the project, the rest kind of sells itself. So my job was really to shine a bright light on that history for those who were there and forgot, and for those who were not there.
So how has people been seeing, what you've been trying to do with Eco-Atlantic over the years? How have they been accepting, what you've been trying to do with Eco-Atlantic?
Well, myself being a millennial, of course, I leaned into digital marketing. So we have a huge presence on social media, Instagram, YouTube, LinkedIn, Facebook, all the normal social media platforms. And there we were able to tell our story ourselves in different ways for people to understand, the older generations and the newer generations, and also the international audience who are very interested in the project.
Awesome. Thank you very much for that. Please, a warm round of applause for Ms. Joanna. All right, so I'll just take it right after one another since you're seated that way. All right, so Mr. Akin Patola, right, there's been a new 1.5 luxury property tax, right, that was introduced, and then it took effect this year, January 2026. So we just want you to address this tax, maybe shed more light on what this tax is all about, how it affects us as real estate professionals, real estate investors, right? Before we even talk about how it affects valuations in Ikoyi and Maitama, these are known as the most affluent neighborhoods in Lagos State. But let's talk about the new tax law first. That's the 1.5 luxury property tax. Explain, shed more light on the tax and how it affects us as real estate investors. And
Okay, thank you. And Good morning, everyone. Let me first of all thank the organizers, Toby and the entire team at Alpha Crocs. I can't believe it's up to 10 years, and I think they've done an amazing job. Well done, well done. So thank you for that question. For me, and this is me speaking personally, I think the new tax reforms is a step in the right direction. It takes cognizance of the various reforms that we've seen the new government put in place. Around the world, you see that tax is a major revenue driver for government. It is no gainsaying that the government is broke. We're looking for monies everywhere. There's a lot of borrowing. And that will play on the deficits of even this current budget that you see. So I think it's innovative. I think it's fantastic. As regards the 1.5% luxury tax, as regards the 1.5% luxury tax, I appreciate the fact that it is targeted at the upper end of the pyramid. You see a lot of buildings cross-board in the highbrow via Ikoyi, Lekki, Oniru axis. A lot of them, within the last few years, they've been priced in USD. You would agree with me. There are a lot of takers for those properties, and it's a demand play conversation. If people are not making interest, people are not making offers, people are not buying those properties, they won't be supply. As at the last count, they are probably over 90 high-rise luxury developments in VI Ikoyi Oniru axis alone. I think that if government begins to tax some of these luxury developments, that will be a high revenue driver. But on the same vein, it will be interesting and nice from a policy standpoint to hope that Lagos State government will also be able to do things in place as regards infrastructure. Let me give a case in point. The road that leads to Banana Island, and we speak to the conference topic, resilience. You all know that once it rains, that road will be an eyesore. You can't even pass there, even with your luxury vehicles. When you compare and benchmark an average 3-bedroom apartment in Banana Island, in Ikoyi, even those ones priced in dollars with similar developments outside the country, you would wonder what is going on here. You would see that if you want to juxtapose that with investment, yes, it will give you the return on investment. So a typical apartment leasing or selling for $2 million to $2.5 million can easily rent for $100 to $150 million. So yes, you do get those returns. But in terms of the infrastructure, we still have a long way to go in terms of roads, drainages, street lights, and of course security. So this is me also admonishing the Lagos State government that they need to do a whole lot more. If they do that, they can also engage the organized private sector. Those ones can build more. Taxes can come in, even in terms of land use taxes, generate huge revenue for government. Then that is how you now get the complete conversation of having a resilient, strong, and vibrant smart city for Lagos. Thank you.
All right. Just before we thank, please a warm round of applause for him. But before you drop the mic, you were talking about this. Before you drop the mic, you were talking about that there is need for infrastructure in this area. So are you saying that the 1.5 new luxury property tax is not coming at the right time? Are you saying that there are some things that should have been done before introducing this luxury property tax?
So the right time would have been yesterday, but there's no better time than today. This year is very strategic for government, knowing fully well that this year is going to be arguably split into two, because we know 2026 is preceding an election year. So, of course, we know that Lagos State government is doing a lot. We've seen the advent, we've seen the positives of the Lagos-Calabar Road, we've seen other infrastructure projects that have been in place. You proposed second international airport, the 38-kilometer fourth fourth mainland brick that will still come on board. So these things we know, we see the design online, we know it will come on board. We've seen a lot of these roads being done. But I think there can be a lot more.
Okay.
I think the right time to do it is now, which is fine by
So
me.
you think that tax would, work on that?
I think so.
Okay.
I
All
personally think so.
All right. Thank you very much, Mr. Kiopatala. Please a warm round of applause for him. So whilst the questions, the panel session is going on, please, if you have questions, you can do well to just jot them down, And for our online audience, I'm aware that some persons are also online. Please, you're not left out. You can also drop your questions in the chat room, chat box over there, and I'm sure that the media team will get your questions across to us. All right. Let's move on. But before I come to you, Mr. Non, right? Let me just quickly give a question to Mr. Toby, and I really want to focus on construction and feasibility. So in 2025, construction costs went up, I think about 40%. And I want to believe that real estate investors here and even expert professionals are thinking, how do I still maintain quality? How do I, how do I just give my clients what they want without going bankrupt myself, without, without just me falling on the negative side, and at the same time, I don't want to send my clients away. If I tell them, oh, construction cost has gone up 40%, and so this has to go up, and then some of them might scare some of them away. So how have you been able to maintain quality and at the same time sustain your clients? All right. You're welcome.
Hello?
Okay.
Thank you very much for that question, Praise. Good morning, everybody, again. That's a very important question, especially for those of us that are playing in the development and advisory space. So what we realize is that if you're operating in an environment, you should always be ahead. You should be proactive. So one of the ways we've been able to mitigate, the rising cost is through, data-driven approach. Market intelligence is very important. So even before, the market is going to go crazy on you, you sort of like anticipated it. And before you mentioned feasibility, before we start any project, a feasibility study is very, very essential. Another way that we've been able to mitigate this challenge is through smart contracting. So if you are doing large projects like that, you can go to your suppliers and have contracts with them at fixed prices based on how you anticipate that your project is going to sort of like progress, especially for things that are more expensive like the steel and your finished products. You can sign advance contracts to mitigate that kind of issue. Another way we tackle it starts from the way we design our buildings. We approach it in a more technical manner, whereby we do value engineering. Some spaces are not required or some items are not required. You quickly cut them off before you go into that project. And it's very essential that you carry your subscribers along. So communication is very key in what we do. So they are part of your project. So if anything, significant happens, they are aware, and that's how you manage to, deliver on your promise.
All right. So you mentioned that there's some things you look at when you want to deliver a project. Maybe this is not needed. How have you been able to convince your client? You think it's not needed. What if they think this is what I want in this building or in this property? How have you been able to convince them to accept what you are trying to sell to them? To maintain that. So.
Very important question. Like I said, before we go into any project, we do a feasibility study. So we've already collected data. We know the things that they can live without. We know the things that they can't live without. So not like we are the ones imposing structure. And what we build would be things that they require. There are some essentials that you can't even compromise on. So basically, before we start any project, we've already had that engagement, and the product we are delivering, ticks all the boxes. There are some excesses which, we cut off. Like, I'll give you an instance. You are building on maybe a 650 square meter land. You are building 6 apartments. You have to consider parking. In the process of sacrificing parking, you put a small, tiny swimming pool that is not necessary, that they will never use, and then constitutes mosquitoes and all of that. So we can take that off and use that for additional parking.
All right. Thank you very much, Mr. Toby. Please a warm round of applause for him. All right, so now to Mr. Non, right? You are here representing Stanbic IBTC Bank, and you are also you are a manager for home loans right in that bank. So that means you definitely give out loans to real estate developers and real estate investors. For somebody here that wants to, come to Stanbic IBTC, tell us what are the requirements to get a loan, and why do you think maybe Stanbic IBTC is the best if you want to get a loan for, if you're in real estate, if you're in the real estate industry, why do you think your bank maybe is the best, and what are the requirements to get a loan?
All right, thank you very much, and good morning, everyone. Well, I would talk more on what we stand to offer, and the offering will actually be what will attract you to the bank. It's not about the beauty or the color of the organization, it's what we offer. And maybe before now, pricing has also been a major problem in the real estate sector. Getting funding, I had someone mention funding. You have a project, you do not have enough to kickstart or even to finish, or you desire a property that you want to buy to live in, not even for any purpose or to make extra income, just to live in. But your take home has not even taken you home, not to even take you to a new home, right?
Why not? Was that necessary?
And that's simply because even for some organizations, just as us, the pricing to get a mortgage loan before now, it's double digits. Maybe the minimum we'll see for us is about 28%. And I can see people shaking their head. But thanks to the new product that was brought into the space last year, towards the mid-year of 2025, called MREEF.
Yeah, I was going to come there.
Yes, called MREEF, right? Stanbic IBTC happens to be the first commercial bank to sign up with the Ministry of Finance on this. And I think we actually did the first disbursement. This MREEF simply means Ministry of Finance Real Estate Investment Fund, right? And it's a scheme that was brought to life to reduce the housing deficit that we have in Nigeria today. This keeps growing in millions. And this scheme, investment fund, has been directed towards reducing the housing deficit. And what we had is a 1 trillion naira scheme directed towards home ownership, 100%. This is a collaboration with Ministry of Finance, that is the federal government of Nigeria using the Ministry of Finance, and some corporate investors. The first tranche of this 1 trillion naira went live the mid-year 2025, and that was 250 billion naira. One thing that's appealing about this, because when you talk about government funding, many people do not want to even venture into it, because the question is the fund available, how's the process like? The good thing about this is there's a fund manager involved. This 250 billion we're talking about is already seated with a fund manager, right? And you are able to get it. And the interest rate is 9.75.
Okay, you just asked a question, really? So?
Yes, it is 9.75 per annum. So there's nothing like hidden cost, or else you are not aware of it. So, okay, I think it's getting interesting, right? So I'm just even trying to give you the formation of how the funding is all about, right? And there is funding, they are in partnership with many other organizations, commercial banks, and some primary mortgage lenders, which Stanbic IBTC has to be the pioneer. And I can tell you that we've done billions in disbursements in the space of 6 months. Billions, double-digit billions in disbursement, to tell you how easy it is. It's just for you to be an income earner or a self-employed individual or even people in diaspora, they have opportunity to access this fund. More to that, this fund is to cater for both the supply and the demand. So there's a portion of it which is about 75% of this 1 trillion naira that is meant for the demand. That is for me and you who wants to buy a property. The other part is for the supply, for developers, reputable developers who need funding, but they do not have the expected requirement and the likes. Ministry of Finance, MRIF, is ready to guarantee, like an off-taker guarantee to that developer, to the commercial bank who is willing to do it. And I can tell you that we are also partner in this. So we're able to run through the whole value chain from the supply, which government is also trying to, push in more constructions, and also to the demand. I think I should let others speak, then I can come back tomorrow.
All right, but I don't think he is. Please, a round of applause for him. But I don't think you really touched on the requirements, right? Yes, that was the question. You just explained you sold MRIF to us, and people's mouths are watering. We're the appetite are ready. But what are the requirements? Is it somebody that maybe has been dealing with trillions that is able to invest, that is able to get investment from MRIF? But yeah.
So far, you are in Nigeria. So far you are. Am I using this audio? Hello, it's not working. Hello. Hello. Okay. Is this better? I think the first one is better. I can hear myself. Hello. Hello. Okay. Thank you. So I've mentioned the formation of the fund, the interest rate 9.75. Those who are eligible are all Nigerians. All Nigerians so far, you have a paid employment, you are an employee of an organization, or you are a self-employed individual. So it's either you are receiving salary or you have a business that is paying you salary, right? The requirements are just simple. One, the tenure for this facility can run up to 20 years. That is 240 months. This is subject to your current age to 60 or your current age to retirement. So if you're 40 years and below, as of today, you are able to access this MRIF, this mortgage facility, for 20 years. But if you're 41, as of today, you're only able to access it for 19 years. If you're 42, 18, and they're up to 57. If you're above 57, at that time, it's just for you to wait for your retirement package, right? But on a lighter note. So the maximum age is 57 to access a mortgage facility in Nigeria. And that means you're able to run it for 3 years. However, we have some organization as of today in Nigeria that their retirement age is now 65. If you are able to get that confirmation from your organization, we are able to extend the tenure of the facility to your retirement age of 65. What we require to profile you or for you to know your home loan limit is we need to know your monthly net salary, how much do you earn on a monthly basis. We need to know your age, which I've told you what the age is all about, to let you know the tenure, to know how long you can run the facility. And also, we need to know if you are indebted in any bank organization, because that will also be factored into how much you can access. These three data are what are required for us to tell you how much you can get. And once we tell you how much you can get, that then gives you the idea of the kind of property you want to look out for. Of course, your limit cannot be 50 million naira and you are looking forward to buy a property in Lekki. You don't want to waste your time. It then means you want to look elsewhere. And I tell people also, I've had a session before coming here today, and one thing I tell people is this MRIF is a great opportunity that I think everybody should strive hard to key into. It could be a vehicle for you to have your first home, or a vehicle for you to have your other home, or even a vehicle to have a home that can generate income for you.
So it's not restricted to real estate developers alone? You want to-
So that is the demand and the supply. So for this, the one that is mortgage is for individuals who wants to buy.
Okay.
The other part is for the developer, which is another dynamics entirely, which is managed by our real estate finance team. And that one, Emrif will not give you the cash. They will guarantee, they will give you an off-taker guarantee,
Okay.
right, to a percentage, guaranteeing the organization that wants to lend to you.
All right. Thank you very much, Mr. Non. I think we'll come back to that. There's a lot of questions waiting for you already, but we'll take question and answers, later. So quickly, let me also direct these questions to. All right. Let me direct these questions to Miss Joanna. Right. So for somebody that wants to, that is maybe in charge of. That is in charge of a big project, smart city big project like yours, like Eco Atlantic, and they also want to do what you are doing. They want to be able to position their projects, in that light, the way you are doing with Eco Atlantic. How will you? What are the steps you took or you've taken that you can tell somebody like that, or now they can also position their project, to something like Eco Atlantic?
Okay, thank you for that question. I think it starts with your market research. I often say that Nigerians are speculative investors and sometimes speculative developers. They do what they think, not what they know. And we haven't always had the data there and available for us to accurately go into the market knowing what people want. Now we have so much more access to information that we should take into consideration when developing and also marketing. So for us, we looked at, when I came in, I wanted to look at all the generations of people that are going to key into the project, not just what has been happening. So, for example, globally, there's a generational shift happening. One generation is slowly handing over to the next generation.
Yeah.
So how are you as an organization marketing to both, let's say, father and son, or first generation to second generation? A lot of people just focus on the traditional off-taker, and the world is changing. We have international interest. We have young tech millionaires or billionaires.
Yes.
People are making a lot of money from streaming. So you can't overlook the non-traditional client. You have to look at everybody. So I think that would be a good way to start. Look into a broad range of clientele that you're trying to market to. Don't just go for the obvious.
All right, awesome. I love that. Please, a warm round of applause for Miss Joanna for that question. All right, so we have 3 questions here. So I'm just going to read out. Maybe I don't know who I'm going to direct this question to, but maybe I should take this to either Mr. Akin Opatola or Mr. Toby. So this person is saying that we saw a lot of buildings go on fire last year. I mean, the main one was the one at Eco Market, right, where that building caught fire. So this person is saying both commercial and residential buildings are just going up in fire. So what is real estate take on this to reduce this incident, right? We know of the fire extinguishers in buildings, right? I want to believe these buildings even have them, but yet we are having these issues with fire. Sometimes it's even the connections or this that happens and then there is a fire. So what's the real estate what is real estate, the real estate industry take on this to reduce this incident? So should I direct that? I think Mr. Akintola and then Mr. Toby will talk after that.
Okay, thank you. So I'm currently the chapter president for an international real estate, we call it like International Real Estate Business Club. The acronym is FIABC. We've been around for 53 years. Basically, what we try to do is, amongst the networking, the knowledge shared, the travel, is to do a little bit of advocacy. It's unfortunate, I know that particular building and so many buildings that went up in flames last year, and many lives were lost. In terms of advocacy, just last quarter last year, we had a webinar that speaks to insurance. But insurance is the very last play after the unfortunate incident that happened. So we try to also sensitize our members. The FIABC membership is drawn up from all real estate professionals across the construction industry. So we have valuers, we have finance people, we have developers, real estate consultants like myself, estate surveyor and valuers. And now we've started to integrate government officials into, so that, as Toby said, we're not meeting and discussing in silos. We're bringing all stakeholders together. And we like the idea when developers want to plan and build some of these high-rise structures. They come to the marketplace. What do I mean by the marketplace? They come to real estate consultants and ask, what does the market want? What does the market need? We are in touch with the stakeholders, with the demand side. And we tell them, look, you must have enough sprinkler systems. You must have 2 or 3 fire escape. We know that, yes, this does add to the cost of the building, but this also speaks to the theme in terms of being resilient. These incidences don't just happen here. It's across the world. But in terms of resilience, what do we do? What is our second play when these things happen? We learn every day. There's a particular one that happened last year. I think it's a subsidiary of UBA Bank. And we found out that it had to do with their inverter systems. So we went back to our membership and said, look, we should speak to ourselves so that those conversations can cascade to the larger audience, developers, and even the consumers, to say, look, maybe we should all look inwards, where we live, where we stay, our offices, and redesign our buildings. Where we currently put inverters should be moved away. Unfortunately, what we found out, and this is after the government had put together a team to investigate even the cause of that incident, that unfortunately, and that's why so many lives were lost, that the escape route was just smack where those inverters were. So going forward, even in terms of Lagos State planning approvals, they have also learned from that. And in terms of their design, before they finally put the stamp to it, they will make sure that where are you going to put your solar systems, where are you going to put your fire extinguishers, and even things like sprinklers, and especially the inverters, so that it is not within the escape route. Thank you.
All right, thank you very much. So please a warm round of applause for Mr. Akin. All right, so Mr. Toby, I mean, I've seen movies where, you know, a fire is happening and then there's a fire bell and then people run out and just like you said, there are escape, you know, routes for when, you know, a fire occurs in the building. So for somebody in the real estate, as a real estate developer, what are you also doing, you know, when you're constructing, building, to make sure that even if this fire happens, because sometimes it can be inevitable, right? Even if it happens, how do I make sure that, you know, lives are, you know, safe in a way, properties are not so lost, and then before it escalates, at least some things are, so yes. So what are you doing to make sure that?
Thank you very much for the question. I believe that I'll speak from experience. No one actually prays to have such incidents on their projects. But we learn from other people's experience. So part of the requirements when we are doing these developments is we make sure that every unit has a fire extinguisher and a fire blanket in some instances. And like Mr. Akin rightly mentioned, I think we also need to go back to our own drawings, look at how we do our designs going forward, because it's very important that we take account in, you know, all of you know, the situations that might occur. So there's no other way to do it than to prevent it. But if it ever happens, make sure you're ready. Thank you.
All right, thank you so much, sir. All right, so this question also says that a lot of projects are going on across waterfronts. Do you think it's sustainable? I think I should ask you that question because, I mean, you have a project that's surrounding that. So is this sustainable, and how have you been able to do it over the years?
Thank you for that question. Yeah, we are very proudly, Eco Atlantic obviously sits...
You heard that, proud.
Proudly, yes. Eco Atlantic sits on the Atlantic Ocean, giving obviously ocean views, breeze, beautiful sunsets, beautiful sunrises. But beyond that, the city is protected by what we call the Great Wall of Lagos. This is something that was designed by experts, tested in Denmark, who are... Denmark, they're experts in coastal engineering because they themselves face those issues. And it's been tested using scale modeling against storms that we can predict for the next 1,000 years. So when we talk about sustainability, 100%, we're definitely focused on that. And it's not just about the studies that you do at the beginning of the project, it's also about constant monitoring, which we do annually to make sure that, you know, we're checking how global warming or global factors are shifting those initial reports and how are we preparing for it. Also, when it comes to the Great Wall of Lagos, a lot of the materials that, well, some of the key materials, should I say, which I would say are the acropods, are actually manufactured on site, and some of the large rocks also are brought in from parts of Nigeria. So when you talk about sustainability, we're not completely dependent on importing materials from abroad, which obviously is not sustainable. Apart from that, we also are planting over 300,000 trees, which we grow off-site throughout Eco Atlantic. We also save trees. We saved, I think, 2 or 3 trees that were being chopped down in Ikoyi, trees that are over 100 years old, that, you know, a developer comes, doesn't even appreciate the value, and they're hacking at the roots. We put a lot of effort, time, and resources into safely moving these trees to the city and planting them and making sure they have a new lease of life. Apart from that, obviously, we're creating shade with these trees to make the city more pedestrian-friendly. Nigeria is not necessarily the best when it comes to being a pedestrian-friendly city, and Eco Atlantic is tackling that. In terms of sustainability, we also encourage our developers to use, to build to EDGE certification, which is also a sustainable certification, which I think 2 of our developers have now. So we're very sustainable, we're very driven by sustainability in Eco Atlantic City.
All right. Please a warm round of applause for Ms. Joanna. That was awesomely answered. Also, we'll take the last questions before we move, the last questions for everybody before we move into the audience, so if you have questions. So here we have a question for everybody. So this goes thus: if the government fails to deliver the promised 4th mainland bridge, I think you talked about it, so maybe you start to answer. You know, the fail to deliver the promised 4th mainland bridge connectivity by 2027, which of your current hot investment zones become a dead zone?
Sorry, can you repeat the second part of the question?
All right, so if it fails, if federal government fails to deliver the promised 4th mainland, the 4th mainland bridge connectivity by 2027, which of your current hot investment zones become a dead zone? Or how is it going to affect you? If it comes into fruition, let's just go that way. If it comes into fruition, if it happens that it's installed, how will it propel further your own real estate industry? And if it doesn't, maybe you've put some things, you've calculated some things on it. How is it going to affect you basically as a real estate investor and developer?
Awesome. So before I answer that, let me just chime in on the question you asked, Joanna. So I think, yes, arguably, there's a lot of sand filling going on in Lagos State. I think it's awesome. Part of the challenges of urbanization is overpopulation. We see it everywhere. Eco Atlantic is doing amazing, but we see it in Ilobirin, we see it at Orange Island. You see, for infrastructure, and in places like VI Ikoyi, the harm has already been done. But you see, for these new emerging cities, they're taking smart infrastructure nodes, putting in resilience into place. So, and if you don't have much land space, which is not just here, but around the world, you have to go vertical. So you see a lot of sand filling. A lot of them are doing it to global best practice. It happens every day, even in places like Riyadh and in Dubai. So I think it's amazing, and I fully support it. To your question, so for me, I would like to put a timeline to the 4th mainland bridge. The current president, Bola Ahmed Tinubu, when he was governor about 22 years ago, governor of Lagos State, the proposed 4th mainland bridge was his brainchild. And I have seen and followed different policies. We've had successive same-party governments in Lagos. So initially, about 2 years ago, we had about 74 preferred international bidders. Now, if you check online, I think they've narrowed it down to just 2. So they're taking baby steps. I mentioned earlier about shortage of funds. So you cannot put a timeline to development. I am almost certain that it will be done. It will be a game changer in terms of traffic, in terms of connectivity. The design I see online is super, super amazing. It's going to connect, I think, somewhere around Igbobo. 10 super mega developments that are likely to come up in Lagos with collaboration with federal government. I don't know which one will come before the other. I see a lot of land banking because if Lagos State says they will do a project, they typically do it. So a lot of people are benching their investments around that Igbobo so that they can it will appreciate whenever contractor goes to site. But you see, for me, I think that people should just follow these policies. We've seen a lot of appreciation even in Lagos-Calabar Road. They are moving extremely fast. From Ahmadu Bello all the way to Ekpe. The first aspect of the road has been commissioned. They're waiting to commission the other aspect. There are even aspects for land banking and appreciation and speculators all the way across even the 6-7 states that it would traverse. So for me, I think it's optimistic time even for real estate players, developers, investors, real estate consultants now in Lagos and across the country.
Thank you very much, Mr. Aki. Please a warm round of applause for him. Thank you. All right, before I come back to Mr. Non, let's go to Mr. Toby. As a real estate, developer and investor, if it fails, how is it going to affect you? However, if it succeeds, how is it also going to affect, your business?
To me, that question is, I would say, it's not really challenging because right now, locations, areas already exist, and they've been accessed one way or another. But if it does come, it's going to improve connectivity. It's going to increase the value of those assets. So it's just going to be status quo if, it's never done. So that's the way I look at it.
So if it's never done, which of your hot zone will become a dead zone?
Exactly what I'm saying. There's no dead zone. This is Lagos. There's no dead zone. Everywhere is active in Lagos. So
Like
I think it's just status quo. But if it comes, great. It's going to increase connectivity and value.
So some of those zones you mentioned, people are saying that, you need to buy into this. Have you tried to quickly, buy into those zones as well?
Funding.
Oh, God.
Funding.
Mr. Non, what are you going to do to that? Please, the last word on it. So people need funding, So why are they coming? Are they really coming for funding, or you are the one rejecting them, or Because every real estate developer keeps talking about funding. Am I correct? Yeah, correct. Funding is a huge problem, but you are saying you are giving them. So what's the problem?
Okay, before I go to funding, I just want to have a word in this last conversation. I'm not a developer. Mine is into funding. And all I just see is developers also most likely taking advantage of that 40 million bridge when it happens. Very soon, once they just do land breaking, you start seeing developer marketing lands there 2 minutes away from the upcoming 40 million bridge.
No more really now.
And it's
that's if it has not started already.
Look at this coastal road. Properties around that coastal road now are like, double the price. And that's what happened. So, like he said, everywhere is green in Lagos. Opportunity then comes at different time. Even for a developer, the fact that there's a transformer coming to that area, even for a landlord, the rents will change. Transformer that he has not added 1 kobo to, But that is how the whole system affects pricing. And it also tells us that there's no time to delay in investing, in possibly getting your own home. Get a property now. You necessarily do not have to buy a property that you want to live in now, and that's the honest truth. Some people would say, I want to hold on till I get a better job, or till I get a more robust salary, or till I rise to the peak of the career. Trust me, you will remain flat. Because as much as your salary is growing, the property you are eyeing will also not remain the same. Yeah. So you'll still not be able to afford that same property in the next 10 years. Yeah. So why not get a property that you can afford now, right? Get a tenant, you're making income by the side, and it's also a store of value. And that is what this MREIF can enable you to achieve. Maybe at the end of the session, I can leave my contact email where inquiries can be sent in. We are willing to work with every developer. In fact, I can tell you that the challenge we are only facing, which you mentioned, is not us rejecting requests. We have in fact, I'm always in the office till late. Inquiries coming in every day. The awareness is there. A year, 2 years ago, we were on the street looking for who to convince to take mortgage, but now you cannot even leave the office because the inquiries are coming and people are taking up it. And I can tell you for a fact, we had an allocated fund for Stanbic IBTC when we started, and before mid-December, we already exhausted that fund. Wow. Yes, and this is in double-digit billions. Wow. Yes. So people are actually taking advantage of it. And the good thing about how the whole system has changed is, before now, it's only the people at the upper part of the pyramid that can access mortgage. But you see those mid-income earners also becoming people of my age group are now landlords everywhere. And the good thing, again, is that for us in Stanbic IBTC, we can finance any property anywhere in Nigeria. We are not restricted to Lagos, Abuja, Port Harcourt, the way it is, or Abuja. No, anywhere. So far, the property has a registered title. And I think that's another conversation for another day where developers need to pay more attention to. There are many properties that unfortunately we cannot fund and we cannot finance, because when you bring them on board, they do not have a registered title. And we do not deal with such property, because any property you are buying, we do our due diligence. We go all the way to lands registry to make confirmation. We do chatting, we do valuation, we do search, and we even do verification. Before you must provide that original title document. We do not want to deal with Oluwole, and at the end of it, remember, we are not taking any additional collateral. It is that property that collateralizes the loan. Oh, so we are trying to protect you and also protect the bank. So you don't need to go and bring many documents or go and get a C of O or your great-grandfather, as it's usually said. That property you are buying is the collateral.
Thank you.
Take that baby step today, and before you know it, most likely you'll become a homeowner before year end.
Thank you very much, Mr. Nam. Please, a warm round of applause for him. I have several questions, but as you know, I'm not a real estate developer, so let me leave it out to all of you. So we want to take questions right about now, because I was even about to say what disqualifies real estate developers from getting loans, but you mentioned it at the tail end, because if I go there and then I'm being, I'm not liable to get the loans, and then you mentioned some of those things. But if you have questions now, I want to take them. All right, at the back, can we get an extra mic? Is it possible? All right. Okay. All right. I think I have to move around with this mic. So we'll just take 4 questions quickly, so we can move to the next. One person at the back, the lady here, one person here, the last person. All right, 4. Sorry. Please, your name and who is your question directed to?
Good morning, everyone. My name is Dr. Mafi Kuyomi. I'm from Property Runs and Development Limited. Thank you very much for this conference. I'm enjoying myself. I have quite a number of questions, but I want to direct my questions at the Stanbic guy. You said if you want to give a loan to developers, you made mention of reputable. What constitutes reputation or reputability for you to assess? Because you said you have an influx of people who have made applications for your loan, but this is the first time I'm getting to hear you didn't really go into the market. Maybe you have done that in the past, and I've been in this market for 36 years. I don't know you have such one single-digit loan for developers. That's number one. I want to come to Joanna. You know, I'm your agent, I met you with Pere in your office. Remember me? I'm one of your agents, and one of the questions that we get to face all the time is that, Eko Atlantic is former Bar Beach. It used to get flooded, and people get their home appreciated and all that. They said it will sink. What assurance. You talk about the Great Wall. Would that be enough for you to give people kind of confidence for? Because real estate is a long-term thing, 50, 70, 80, 100 years. Would that wall stand? Number two, people want to buy smaller plots. I think I talked to Pere 3 days ago about, and Halima, about people who want to live there, and they want between 500 to 800 square meter. You don't have that. Why? Maybe I'll come back to the rest and give people that chance.
So should we take answers one after the other, or we should take all questions? Take all together. Let's take all together. All right. So, here.
Good day. My name is Happiness. I help people create generational wealth through agriculture. So my question is to Stanbic IBTC Bank. The loan you talked about, is it applicable to agriculture, real estate agriculture, to be precise? Is it open? And you already answered one of the questions, which says it's open to every other state, not just Lagos State, Abuja or Port Harcourt. So that's my question.
So is the loan available to agriculture, to real estate agriculture? All right. Okay.
Okay. Hello, good morning, everyone. My name is Kauthar, and my question is going to Stanbic. My question is, what is the max a buyer can get for a mortgage? What is the max they can get? Thank you.
Who's it directed to? Please, did you get that question? Yes. I told you that today, when you came up here telling us,
Good morning. My name is Yemi Akinle. My questions are in two parts. The first one is directed to Mr. Toby and the gentleman from the big pot, Mr. Stanbic. What are you doing about diaspora marketing in real estate? As of yesterday, I have somebody conversing with me, telling me to help her to get a property based on mortgage or, like, say, PA small. There are a lot of people in the diaspora that wants to get property here, and one of the major threats is that if I give it to my family member or to my friend, the money can disappear. And it's a big one for both of you, getting forex in, whether for Mr. Toby or for Mr. Stanbic IBTC. What is that your drive towards making it accessible to those people out of the country? And secondly, I think I heard your personal self talking about a representative of the Honorable Commissioner here. And I think that is for everyone on the panel and the Honorable Commissioner. Lekki is getting overpopulated. The roads are being done, and you can imagine the traffic people go through. And I think one of the problems is the development was not properly planned. What are you doing to redevelop or to replant some places that you know are sitting on setback, on canals? I know the Commissioner for Environment, Tokumbo, I've done a lot. They even named him Tokubo bulldozer, pulling down houses. What is your take, Mr. Toby? Is he pulling down the right houses? Is he doing the right thing? And what are you doing to make sure that the Lekki corridor is not only accessible, but well planned, not for now, but future? Thank you.
All right. So, did we get all the questions, sirs? Awesome. Okay, that was supposed to be the last question. Silver.
I just wanted to find out, this is about Eco Atlantic. The general impression is that Eco Atlantic will not be fully ready for another 7 to 10 years in terms of development. So maybe you want to say something about that.
So, Ms. Joanna, did you get all your questions? Did you get all your questions? All right, so let's start. Who wants to start first?
So I'll answer the first question about reassurances against flooding. So yes, it's true. Initially, I already spoke about the Great Wall, and as I said, it's been tested against 1,000 years. I think he asked 50 years, 100 years. It's been tested against 1,000 years. So that's the first reassurance that Eco Atlantic can give. Beyond that, it's important to know that Eco Atlantic is between 8.5 to 9 meters above sea level. Ahmadu Bello, which as everyone should know, that flooded, where the Atlantic Ocean flooded at Madubelo, is actually the highest point in VI. Beyond that, everything goes lower. So actually, if someone is concerned, those are the areas that they should be more concerned about, because those are lower. We know that a lot of these areas were actually originally swampy areas. So at Eco Atlantic, we have built to the height above sea level that gives us that level of protection. Apart from that, we also have an independent sewage system, and we use gravity to our advantage. So even when we encounter heavy rainfall, it collects through the sewage system, through the canal, and passes out immediately. So we don't have that collection of rainwater throughout the city. And that is a huge investment into infrastructure that the city has made. Before you even buy your land, you're already plugging into a city that will give you sewage, road systems, independent power. So this is a lot of reassurances in terms of how is the city going to last for the next 10 to 15 years. You missed my answer. Then when it comes to smaller plots, yes, the demand for we have smaller plots, not to say the sizes that you mentioned, but we do have smaller plots, and the demand for them was high. The city has a master plan, and originally it was supposed to be a mid to high density development. But we have allocated smaller plots, and they've sold really fast. So what I would say is that if you're a developer, if there is a next allocation of those small plots, do not delay, because the demand for them is very high. I remember when we first had those plots, and I was telling people myself, this opportunity, but every agent, every developer always loves to tell people this is not going to stay on the market for long, but truly, it did not stay on the market for long. So if we get a second round of allocation of smaller plots, I would just recommend that you do not delay. And the third question, I think, was, okay, the timeline of Eco Atlantic. So people have been living in Eco Atlantic now for years, as we are now. We have a school that's fully functional. We have Orca Mall that just opened. We have multiple data centers. We have TVC studio. We have my office, for example, Azuri. People are working and living in the city already and have done and will continue to do so. So when you say, when will it be completely ready, we can't put a time on that. And if we put a time on that, it would be a lie. Because we sell land to developers, we are not developing everything ourselves. So we cannot say this is when it will be done completely. But when it comes to the infrastructure and land reclamation, in the next couple of years, we would have made incredible progress. We've already done over 60%, I said 60%, over 60% of the land filling, and the infrastructure is moving fast every day. So Eco Atlantic is not a long thing of the future as people think. People are living and working there even now.
Thank you very much. Please, one round of applause for her, please. All right, so I want to believe our own questions have been answered. We'll come to Mr. Stambik at the end, because we know that your questions and your answers, it's going to take a bit of time, but we are also trying to make sure that we wrap up this first session fast. So I think I'll go to Mr. Akin, then Mr. Toby to answer their questions before Mr. Non. All right, sir.
Okay, so I'll take the question on diaspora marketing. So, and I'm happy you touched on it. So for me, and this is me speaking as a real estate marketer and consultant, that is my own sweet spot. I noticed a few years ago, a lot of people noticed it because of information, intelligence, and data. I think 2024, about 20 to 25 billion dollars was remitted into Nigeria. That's probably like half of our current external reserves. Is huge. I call it diaspora dollar. We've seen a lot of developers do global roadshows. So they're going to where we have high influx, high concentration of Nigerians, white collar, doing amazingly. There are about 4 million Nigerians living in the UK. Yes, they also want to buy and invest. They see what is happening, the attraction, they see the return on investment in our real estate. But of course, and you touched on it, they are looking for who to trust. So there was a huge one, I won't mention their name, that happened last year. They went in collaboration with the Lagos State government to also give a lot of credibility to it, which was nice. They went to 3 cities in the US, few cities also in the UK. For myself, as the chapter president of my association, what we like to do is every time we get the opportunity to travel, we always visit the Nigerian embassy. When we meet with the ambassador, we always tell the ambassador to create a small cocktail where Nigerians living in those cities can come, and we as real estate professionals, like I said, it cuts across. We speak to those Nigerians there, and we let them know, hey, it is real. These are the data, these are the statistics. We do a mini economic and real estate outlook conversation with them. Then they ask all sorts of things. You see some of them come to say, hey, we saw this on social media. Some people get their fingers burned, they are 419 marketers and developers. It is true. But we let them know, hey, they are realistic, credible, trustworthy professionals out there. And those are the things we like to do. Just day before yesterday, we had a contingent of my association come back from Riyadh, Saudi Arabia. Same thing was done. Visited the embassy, had a conversation. The Nigerians that are doing very well there met with them, and they are discussing about investing. We want that diaspora dollar to come in so that it will add to the demand side and be prosperous for everybody. Hope that answers your question. Thank you.
All right, thank you very much, Mr. Akin. All right, over to you, Mr. Toby. So.
Thank you very much. So I think Mr. Akin spoke on the diaspora marketing. So I will just take the Lekki is overpopulated question, if that's okay. So Lekki is overpopulated. It's not just Lekki that's overpopulated. The whole of Lagos is overpopulated. And I think one of my advocacy has always been on infrastructure. I was telling somebody the other day that I did not believe that in my lifetime I'll drive on the coastal road. So things like the coastal road is what will help solve that overpopulation. You know, once we have the rails working as well, you can live in Ogun State, work in Lagos, vice versa. And there will also be new projects like Dangote Refinery that are creating new cities. So the reason why Lagos is overpopulated is because of economic reasons. So the moment we have, new economic hotspots coming up, that will solve that challenge. So Coastal Road is a good solution and a good answer to that overpopulation question. And then in terms of flooding and urban renewal, I believe that the Lagos State government is doing a good job. The only thing I would say in addition is what they need to do is they need to communicate better. And that's one of the reasons why we have these platforms, so that you have avenues to communicate to people in the industry and also to the public in general. For instance, a lot of developers are selling land in Ekpe, and we that were close to Lagos State, we know that most of those lands are not real. So I think just a little public notice, out there and telling people that buyer beware, you understand, do your due diligence. That would solve that challenge, because what happens most times is that, Lagos State is quiet. They already have a master plan. The onus is on you to go and check what's in that master plan. So if Lagos State comes 10 years down the line and they are demolishing your building, you can be sure that it's in line with what is on the master plan. So that's what I have to say about that. Thank you.
All right, so we are way behind schedule. I wanted to ask there's a question here on the demolition of properties, but because of time, we would want to go straight into the next panel session. But first, please, with a resounding applause, can you please appreciate my panelists for this first panel? You can do that better and louder, please. Thank you so much, Mr. We still have Mr. None. All right, because if I step out without him asking his questions, I know some people are going to get me out there. So, Mr. Nunn, please, in just a few minutes, let's quickly target those questions.
Okay, thank you. I think I noted about 4 questions, and I'll go through them one. The first one is about the reputability of a developer, what makes them reputable, and that's just simple. Your past record, your profile, your financial capacity, past job done. And why are we saying this? These other parts of supply that MRIF is funding is really for big development. Possibly you want to develop like 300 units of flats, apartment, terraces, and you know those are not small projects. And you that you've just done 4-bedroom flats or bungalow, because you heard of this, you're also applying to make use of this. Of course, you might not really be in that bucket. You must have done something like that. Most likely you've done a unit up to 200, and then you're asking for a proposal to do 250, 300. It's still in line compared to someone who is just new and is coming on board to say, I have a land at Ekpe and I want to develop 500 units and you need funding. That might not also work. So we need to see what you've done in terms of large-scale development. And secondly is the bank is not funding 100%. So it's important that we see your cash flow. What can you do on your own? What you need the bank for is support to completion, right? And that's one of the things that also shows that you have the capacity to take a loan, right? So I think that answers it. And many other financial criteria. We'll look through your audited financials, see how you've been faring on your business, because you're not taking the loan to solve the organization problem. It has to be on that same project you want to do, and it will be monitored. Second one was loan availability to real estate agriculture. I really do not understand what real estate agriculture is all about. Is it agriculture or real estate? But maybe there's a fusion.
All right, I think let me try and answer the question. So there are lands that are solely for agriculture, right? Yes.
Okay. All right. So for that kind of investment, you can approach the bank. There are other financial solutions that can be directed towards such a course. But when we talk about mortgage, it's strictly for the finance of purchase residential property, right? We don't even finance land purchase. There must be a property in place that we are funding, and I think that clears that. The third one, maximum loan for mortgage. So under MREF, the maximum loan for every individual is 100 million naira. That is the maximum. However, we can co-fund in terms of if your financial capacity gives you an eligibility to get more than 100 million, we are willing to give you the 100 million MREF at 9.75 and then give you the excess which you are eligible to at the commercial rate, right? But based on the current criteria of MREF as of today, the maximum you can get is 100. However, to get, maybe your limit is 50, you can do a joint application with your spouse, husband and wife. Then the last question, diaspora market. Yeah, for us in Stanbic, we're doing a lot in that space. And for a fact, we funded many diasporans to buy property here in Nigeria. We have criteria and we have some minimum eligibility that they need to meet, which I can make available to anyone who wants. For any Nigerian outside the country, we are able to help them fund their property purchase subject to meeting the minimum criteria. Again, many diasporans are coming to us knowing fully that their money is safe, and whatever decision the bank is making will definitely be to their interest. The Stanbic IBTC is rounding up. Stanbic IBTC is the only, and I say it's only, AAA rated bank in Nigeria.
What would you say before?
Only.
What were you going
It's
to
out
say
there,
before?
right? And it's under the Standard Bank Group, right? So many individuals would rather work with Stanbic, especially the diaspora, knowing fully that we will do due diligence. It's not a matter of you wanting to insist to have a property. It's a matter of us clearing, doing the due diligence and telling you you are good to go on that property. And we are open to any partnership, as it were, and we're willing to get on this. Thank you very much.
Thank you very much, Mr. Nan. A warm round of applause for him. All right, we've come to the end of the first panel session. Please, a resounding applause for all the panelists, Ms. Joanna, Mr. Kim, Mr. Toby, and Mr. Non. Please, would like to take pictures first before you step down, please. All right.
Hey, it's tall, baby.
All right, thank you very much, sir. Thank you sirs, and thank you very much, Ms. Joanne. Please, another warm round of applause for them, please. All right, we'll be going straight to the second panel session because we do not want to waste any of your time this afternoon. But before we do that, we'll go on a 10-minute short break. 10-minute short break, and when we come back, we will resume for the second panel session. All right. Over to you, media, for some music. Thank you. Thank you very much. Awesome. Ladies and gentlemen, a warm round of applause for I Am Tall. The talented I Am Tall. That's his name, I Am Tall. Didn't he serenade you well? He did, right? Please give him a warm round of applause, please. Thank you. Thank you very much for that. Please, if you're outside, please do well to come inside. We're about to kickstart the second panel session for Rio 2026. If you're by the door and you know some person standing outside, please, ushers, you can do well to please notify people outside that we're about to start. Yes, that we're starting the next panel session, and everybody needs to be inside right about now. Thank you. So let's just hold on for everybody to come inside so that we can have the second panel session. But whilst they're coming in, I want to just let you know that this second panel session is going to be very, very interesting. You know when they say they leave the best for the last, so you don't want to miss this particular session. I'm also very interested in the session, right? And I cannot wait to, learn in this next session. It's also going to be the last for Rio 2026. Are you excited? Has it been worth your time? Has Rio 2026 been worth your time? Would you come back next year? All right, awesome. All right, while we wait for other people to come in, we just want to make sure that we keep being on time and we leave here. The time we said we're going to leave here. So this second panel session, we are going to be talking about technology and innovation. So now you see why I said it's a very, very interesting session. And I'm interested in it as well. We're going to be talking about prop tech and AI as game changers. We want to know if technology can offset higher costs and also unlock new value in the real estate industry, right? The first time I heard about prop tech is just property and technology, right? And so I had a friend then who would tell me that what we are trying to do with prop tech is that we want people that are looking for houses to be able to do it online and then get everything they need online, get to pay for the property online, and then move in. Just do everything, do the inquiries, everything you want to do about getting the property online, and then before you know it, if it's a home, you are moving in without even seeing the investor or anything. So we want to know, is that feasible, right? Has it been working? Is this sustainable? That's what we want to know in this panel session. Because the traditional me, imagine with the 0.5 rear camera that they have now, they will make the house look like it's long and big. And then you're not going to pay for that particular property. You get there, you are seeing, so is it feasible and is it sustainable? That's what we want to know. And I'm delighted to welcome the first panelist on this panel session. We are honored to have the co-founder of PiggyVest and CEO of Pocket Hub to be on the first panel session. Ladies and gentlemen, please a warm round of applause for Mr. Ayo Akionlaze. Come up stage, as a first panelist on this panel session. I know you can do that better and louder. Thank you. Second panelist on this panel session is a woman commando. We are delighted to have the head of customer experience at Venco, right? This is a woman who plays a pivotal role in shaping how residents, property managers, and service providers interact with modern communities. Ladies and gentlemen, please a warm round of applause for Mrs. Ajuma Ede as she comes up stage. I don't know, maybe they are seeing in years, maybe this 2026 is your year. That's why they put Mrs. here. Please put your hands together for Miss Ajuma Ede, please. All right. All right, next we are delighted to have the founder of Market In, right? A growth marketing consultancy that works with brands across real estate, technology, and consumer businesses to build predictable demand systems, improve conversions, and also align marketing with sales outcomes. Ladies and gentlemen, if your hands are not busy, please a warm round of applause for Mr. Kayode Abaz, the founder of Marketing, the third panelist on the second panel session this afternoon. Please, a warm round of applause for him. Okay. This time around, they are all sitting like this. Before, they were sitting like this. Okay. All right. The last panelist of this panel session, we are delighted to have a representative from Yalo Technologies, right? She's representing the CEO, Mrs. Morenike Omotolade. We're delighted to have Shehu Amuson in the building. Please, a warm round of applause for him. As he comes up stage, he's been here ever since. Wow, that's nice. He's been here early. I know you can do that better and louder. Thank you. And you already know who is your moderator? If you don't know my name, I will leave the stage. Who is your moderator? Oh, how did you know? So what's my name? Praise. Oh, thank you. A warm round of applause for me again as I moderate this session. Didn't you enjoy the last session? You did, right? So I know you can do that better and louder. Thank you. All right, so like we already said, this particular session, this panel session, we'll be talking about technology and innovation, right? How prop tech and AI are game changers in the real estate industry, in this time that we are in. And we want to know if technology can offset higher costs and unlock new value in the real estate industry. We want to know, is it really bringing the value they are saying is bringing? Is it workable? Is it sustainable? We want to know all of that. Thank you once again for joining me on this session. Thank you. All right. Who should I start from? Who should I target first? Like we did the last session, whilst we are having the session, if you have questions, please do well to just jot them down or have your questions ready so that when we want to take question and answer segment, you'll be ready. Okay. Let me start with Mr. Yoakiola, right? So I'm starting from that end. I want to believe the microphone is there. Okay, so we'll be focusing on why the market is shifting from land banking to rental cash flow, right? And so we want to ask that, okay, with the CBN holding interest rate at 27%, right, the cost of capital is staggering. So we want to know, does the income first strategy actually, will it work? Because we are entering 2026, right? It could have worked in 2025, but will it work in 2026? Or are we just celebrating rental growth, right, that is still trailing behind inflation? I don't know. Did you get my question?
Yeah, I got the question. Hello, everybody.
Hi.
It seems like we're cold in the room. Hello, everybody. Okay, thank you. That made me feel a lot better. First of all, thank you guys for having me on this panel. I'm not really should I say, real estate guy like that, but...
All right. So sorry, Mr. Ayo. Please, I want to just pass the message across. Please, we noticed some persons left already. Please, we want you to fill up the first 3 rows, all the seats right in front of you. Can we do that quickly? Because they're live streaming, and then it's just looking like the hall is empty. So please, can we move to the front? I want to indulge you, please. Please, I want to indulge you quickly. Please fill up the seats right in front of you. Mainly the first 3 rows. Mainly all these ones, they're not special. Just come to the front. Just come to the front. Thank you. Please, if you are still at the back, please move to the front seats. Fill up the seats right in front of you. Thank you. Can we do that ASAP? Thank you. 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 All right.
You guys,
thank you very much.
Don't be shy.
Don't be shy, please.
The first row, they are going to win. Someone's going to win 1 million naira.
Hey, I can even leave this place and sit down there.
So yeah, let's fill it up. So.
All right, thank you very much. All right, over to you, Mr. Ayo.
Okay, yes. Your question was on income first, right?
Yes.
I guess, when it comes to real estate. And you talked about land banking as well. I'm not really a fan of it, to be honest, because if you just have a property that is sitting there and you're in an economy that is doing north of 30% on inflation, and maybe your income on there is like 6-7%, that's not an investment now. You are you're spraying money to you're spraying money to people until you don't make. You're not really. I hope that's not me. It's really not an investment. I think in 2026, even in 2025, 2024 still, a lot of people moved from just taking that yearly income to investments that pay them even more consistently. You see people doing a lot more Airbnb type situations or short stays because you get more money that way, should I say, or some rental properties. I feel and I believe that in 2026, if your income or the amount of money that you're getting in from your property is not at least chasing after the inflation rate or even higher, then you're really not investing. So yes, income first, but the income has to be real and not passive. It has to be something that is well managed.
Thank you very much. Please, one round of applause for Mr. Ayo Akinola, please. Let's do that better and louder to encourage them, please. Thank you. All right, so just the way they are seated, I'll move now to Ms. Ajuma, right? This question is the PropTech visionary, right? We want you to please shed more light or even tell us how we can, or how the real estate industry is transitioning from bricks to bytes, right? Just talk more about tokenization and fractional ownership. Yeah.
Okay, hi. Good afternoon, everyone. Very excited to be here. So bricks to bytes is more of the transition that is going on in real estate currently, where real estate is moving from the capital-heavy, capital-intensive, the slow real estate that we know to something more accessible, more liquid, right? Tokenization is the conversion of, property value into digital units like tokens, right? And you can buy, sell, and trade on, every other digital marketplace that you know. And then fractional ownership is like people coming together to own a particular property. So you can own bits of a particular property. That way, there's more availability of capital. So instead of just waiting to have 50 million, what's 50 million, Jesus? To have about 500 million to own a particular property, right? You can own value. You can own a bit of that with your 100,000, your 50,000, right? So real estate is no longer, or it's moving from being just owning land to owning value. And thanks to technology that is helping us break those walls around real estate today, it is more accessible, it is more flexible and tradable. Thank you.
All right, thank you very much. Please, a warm round of applause for Ms. Ajuma. All right, let's move to Mr. Kayode, right? You're the founder of Marketing, right? A company that consults with brands across real estate, technology, and customer businesses. So and to improve conversions, right, and align marketing. And now that we are in the era of AI, we're in the era of technology, we want to know, consult us on this, on this stage, right? How have you been able to use AI, right, to market real estate properties in this day and time? I was given an example right about now where some person said now you can be on your phone, you can check out properties, you can buy properties without seeing them. How have you been able to do that? Because for me now, I'm very traditional when it comes to maybe buying properties. I want to see what I'm paying for. I want to see what I'm buying. So how have you been able to convince clients and convince buyers or real estate developers to use AI to market properties?
Yeah. Very good question. Good afternoon, everyone, again. Okay, so when we speak of AI, I'm sure all of us are familiar with the generative AI, right? ChatGPT, Gemini, and the likes. But those particular AI systems, they are chatbots, right? They answer questions that you ask them, But when we talk about using AI to drive, the bottom line or to reduce operational cost, then we're looking at more advanced systems like voice AI, conversational AI tools. So let me give you an example. Do you know that right now, AI, you can have a conversation with AI, and you might not even tell that this is an AI you are talking to, right? So we've gotten to the point whereby we can have AIs call you. We call them voice agents. They'll call you. They've been trained to have conversations. They've been trained to learn everything about your business. So we train them on your data, right? And they can speak to you like a sales agent representing your company. They can talk to prospects. They can close those prospects, right? They can act as customer service representatives, right? So in that sense, we are reducing the operational cost. So let's say you had a team of maybe 20 sales agents, 5 customer service rep, 1 social media manager. I mean, so many companies are bloated with so much, so many staffs doing the same thing. So AI can come in and reduce all of those inefficiencies, right? So I've seen a lot of organizations where, you try to reach out to them on phone. You call the business line. How many of us know, there are so many organizations, especially in the public sector, you can never ever reach anybody on the company line. And the number is there, right? So we can implement AI systems into all of those processes to make them responsive. So we have an organization that is responsive, right? So you dial the customer service line. There's an AI that you can speak to that can get your details, that can collect your contacts. And this is not science fiction. This is not Star Wars or, in the future. This is something that's happening right now, right? So these are some of the ways we can implement it. So if we think about all of the ways that technology has changed, like it looks like magic. I was watching a podcast where the podcaster was talking about how our technology now is basically just magic, right? So there are things now that we can do with AI, that is just above. So I want everyone to look beyond just the generative type where you are, asking questions. There's so much that AI can do. So let me leave it at that for now.
Before you leave it, let's pick it up. So you talked about, where you're training AI to be able to close deals, right? Have you tried it? Has it worked? And is it sustainable?
Yes, so it is sustainable, it is scalable. So it just depends on, because you need to give it time, right? Even the ChatGPT that we use right now, ChatGPT, before a version of ChatGPT is launched, they use about a year or 2 to train the AI. This ChatGPT that we're looking at, we have different versions. If you're familiar with it, I think we're on the 5th version right now, right? 5.0, yes. So each of those versions, they are trained over like years, and they train them on all the data that exists on the internet. So if we can also do the same thing with your own company data, train them on the data, right? Of course, we fine-tune them as well because it's not perfect. It will make mistakes, but it would also learn from that, and that's the beauty of machine learning, which powers the AI bots. So with time, it will be able to answer all of those questions like a human. If the person is speaking to is not really, so if you can't pick the nuances, it might not even be able to tell that he's speaking with an AI bot, yes.
All right, awesome. Please a warm round of applause for him. However, I noticed, Mr. You're giving, a reaction. Do you have a contrary opinion to what he said, or do you have an additional opinion to what he just explained?
To AI?
Yes. To
I
AI.
know that AI can create people in the plane doing massage.
And the cooking videos.
And do videos. But yeah, I think that you put me on the spot on that one, sorry. I think that AI is very interesting. It's and again, the applications of AI, the things that 5 years ago nobody was thinking AI, really. Nobody was really thinking AI 5 years ago, at least not even in this part of the world. AI almost jumped at us, right? The earliest form of AI that we could imagine was, ChatGPT, and that was what everybody. But AI has gone far beyond, ChatGPT. So I definitely, support what he says. AI is here to stay, and it can be applicable even in this industry. So yeah.
All right, thank you very much, Mr. Ayo. So sorry for putting you on the spot. I might do that again, though. All right, so let's move to Mr. Sheon, right? We want to now talk about the 2026 explosion in data centers, projected to hit 218, and in where else? And so we just want to address that explosion that has happened in the data center, right, in 2026, right? So we want to just address that and talk about that.
All right, thank you very much. Good afternoon, everyone.
Of course, how it relates to real estate.
Yes, I was going to mention that I'm more in the real estate space, PropTech to be specific. For those that are not familiar with what we do at Yalo, we are a rental financing company. Essentially, if you want to pay your rent, instead of using the lump sum, we'll pay it for you, and then every month the money can be deducted from your salary. Right, so just to speak to what she had said.
Oh, so you're the ones that once money enter like this,
yeah,
gone.
It's gone.
Lord.
Well, the good thing about that is you don't need to worry about that lump sum, because that lump sum robs you of your disposable income, right? You're paying a landlord 2 million, 3 million. Some places in Lagos now it has gone as high as 5-6 million. That 5-6 million, if you had the cash, you could use it to do a good business. Right, that gives you a good return, and then you know that you have a roof over your head, everything works in your favor. So just to come back to the question, I am very big on industrialization in Nigeria, right? I'm always of the opinion that no country can survive without industrialization. And it takes different forms. So it takes the form of the industries coming in, power, the roads, and as she mentioned also the data center. But again, for that data center to actually work, there's an ecosystem that needs to be built. Part of this ecosystem has to do with the real estate infrastructure, right? So you have engineers coming in, you have consultants, even the people that will lay the cables and all. They also need a place that they can sleep so that they can function. They need to be close to the data site. So as much as there's an explosion, we also need to ensure that the ecosystem is sufficient enough for them to carry out their duty. The previous panelists had spoken more on the top of the funnel. That's for the developers. They build the housing for people to stay. But again, what we then noticed at Yalo was that a lot of companies were spending so much money on providing accommodation for their staff. Right, so money that you could maybe put into more operational costs to make the data center better, you use it to provide the accommodation for the staff. So we say, okay, you know what? Let us take over the lease of the accommodation, right? You can put this money into your data center. You can continue to expand your fiber optic network and the rest. So I think on the basis of real estate, right, what we are saying is we are grateful for the explosion, right? But also we need to make sure that the ecosystem is good enough for people to be able to keep up with the explosion. Thank you.
All right, thank you very much, Mr. Sheon. All right, so still on that, just to buttress that point, they're saying that 2026 is going to be called the year of the data center in Lagos, right? So is this a niche play for institutional giants, or can the average investor, find a way into this high-growth digital infrastructure as well? Is it just for people, high hopes, or an average investor can also find their way in that line?
So I think everybody can play in this sector. As I said earlier, it's an ecosystem. If you look at it just as the data center, you might miss the big play. So as I said earlier, these people need form of transportation, right? They need shelter, they need places to stay, they need food, they need so much more to ensure that, they need security. They need so much more to ensure that these data centers are up and running. The big players might be able to take care of the power for the data center, the technology, the this, the that. We might not be able to play there unless maybe you have a liquid 200 million or 250 million they're sitting down somewhere, right? But if you don't have that kind of money, there are so many places that you can play in. the gentleman from Stanbic IBTC had mentioned a mortgage plan, MREF, that you can plug into. Also, if you get a job there, you need a place to stay, you can contact us at Yalo. We'll finance it for you, and then you can be paying monthly. I'm sure our good friends at Venco also, if you have a property maybe around that area, can take care of the property for you. So it's a big ecosystem that you can play into, so you just don't leave it for the big players. Thank you.
All right, thank you very much. All right, so please one round of applause for Mr. Sheon, please. All right, so since you mentioned Venco, I want to just talk about, it says here that, you have this PropTech vision, right? Just explain what Venco is trying to achieve, right, in the PropTech industry right now in 2026.
Okay, so currently, Venco is, what we're trying to do is ensure that residents or people that live in communities, we're very interested in communities, that's gated properties, right? But we also work with commercial buildings as well. But what we're trying to achieve right now is to ensure that these people experience a very high level of convenience. So whatever it is that is going to give them that convenience. Currently, we're doing vending, bills collection, access control, events, and a lot of them. We're also trying to dabble into financing rents, right?
Say that again. They didn't hear you. I don't think the audience got. Did you get what she said? Did you? So say it louder.
Yeah, so we're also trying to double into financing rents.
Why are you rushing that part?
Okay, I should say it very.
Yes.
I should say it very slowly. But I mean, the sky is the sky is very broad.
Okay.
When he even mentioned that they do that, I was not thinking about API integrations and all of that if they are able to. So we in Venco we don't have competitors, right? We just do what we have to do and let the best man win. That's what we do there. So, I mean, there are so many other things. Currently, we have a marketplace where residents can buy groceries, buy stuff on their marketplace, and it gets delivered to their doorstep. So we source for vendors from their vicinity and just put on the platform. And a lot of, the list is really long.
So do you just work with residents alone, or you also work with real estate developers and investors?
So the thing is, real estate developers, property managers, facility management companies, they are our customers. Like, they are the people that bring these communities to us. Okay. Then the residents are now, like, should I say sub-customers, right? Like, they are end users, right? But our contracts, engagement, whatever, it's mainly with developers, facility management companies, and, the stakeholders of these communities.
All right, so let's go back to Ayo, right? This question is specifically for you, but you say you're not interested. You have to be interested in this one because it says, directed to you. So, and also to Sheon, right, representing Morenike. It says that with the blue and red rail lines now fully operational in Lagos, we see rail-induced appreciation. So are you betting on the transit-oriented development as the TOD model for your 2026 yields? Did you get that?
Let me say the way I understand it.
Okay.
You're talking about the trains.
Yes.
Right. I never knew them as red and blue lines, to be honest. I just knew that the train used to go from here to there.
Okay.
And the question was around the last part.
Yes. Are you betting on the transit-oriented development model for your 2026 yields?
Well, again, I'm not directly a real estate developer, right? Maybe I play in the financing part a bit, right? Because of how many people here use PiggyVest? Okay, and just to even talk about, you spoke on fractional ownership. How many of you know that we have that on PiggyVest? I'm just shamelessly plugging my product. Sorry. How many people know where you can actually invest in properties and own it together with somebody? That was something like what she had explained earlier. This is an ad. So back to the shamelessly, back to the question of the train. So I've been on the train twice, right? And I think it makes sense if in developed countries in the West, not like we're not developed, please, we are developing, right? But you can ride the train at so many different times. I think that's the problem that we have here, because Nigerians will pay for convenience, right? I should be able to live in Abeokuta and work in Lekki if we have a train that is working, right? I should be able to do that. But even if I build a house in Abeokuta, I can't do that right now. The train is working, but it's not moving at the time that I have to get to work. If I try it, I'll be jobless in 1 month because I'll always either go to work late
or 2 weeks.
Or 2 weeks, right? Sorry? Oh, okay. So if I don't, if I can't get on the train on time, or I have to leave work super early, then I don't know if that's good in terms of real estate. I don't know if that will be profitable for me in terms of the train line itself, the blue line or the red line. Is it good for infrastructure? Yes, it's nice. But on a real estate play, if I cannot afford to live in Lagos, if I wanted to live somewhere else, I probably won't be able to do that. Right?
All right. So let me just go straight. Is someone saying something?
Sorry.
All right. So let me go into PiggyVest now. Right. So I use PiggyVest as well. And I noticed years ago that they started to give you this feature where you can actually invest, house investments, you can even buy properties. You can even buy, not even properties now, you can invest in a cocoa farm, all of those things on PiggyVest. So want you to please tell us how it has been for PiggyVest and how it has really helped, because it's really still investing in real estate with AI, because apparently I am not seeing the investor, I am not even seeing the land and people, but I'm able to invest and I can get my returns on the investment. So how have you been able to do this, and how has been the reaction of clients to these features on PiggyVest?
Yeah, so when you asked that the question of fractional ownership, it was very interesting because a lot of people do that now. It's easy. I might not be able to afford a 200 million naira home,
yes,
right? But I can own it with 100 people, right? And the rental income from there is split amongst all of us. As far as I'm concerned, I'm still a homeowner. It might just be half of the kitchen, but I'm still a homeowner, right? And it helps people who want to build wealth in the real estate space slowly, right? I don't have to wait till I have, all the money. I can start with as little as 5,000 naira and own a fraction of a real estate project or home or house or anything. And yeah, it's been amazing. It's been beautiful. You talked about trading as well. That can also happen. You can see someone who may want to buy your own part of, the house, right? And maybe you bought it at 5,000 naira, but tomorrow you can sell it at 6,000 naira or 7,000 naira. It's the same thing. I buy a house at 100 million today. I want to sell it at 150 tomorrow. It's the same thing. I just don't have to wait to have that huge form. So it affords a lot of people to be able to do that. So it's been beautiful, yeah.
All right, thank you very much. Before I leave you, please, just for the last question. So we were used to the traditional way of saving money or even going to the bank to save money, but weirdly, PiggyVest have been able to draw so many, especially young ones, to save online, and then they see it as safe. I remember when someone was trying to tell me about PiggyVest, and then before you know it, in fact, they will tell you if your girlfriend doesn't have money, tell her to open a PiggyVest account. How have you been able to create this trust amongst young people and even your clients generally, right? To know that PiggyVest is a safe place to save, and then it has been working for years. So how have you been able to imbibe that trust in your clients?
I think every industry has a way that they build trust. For example, in real estate, if you see somebody that has built the foundation and is going, I mean, maybe you start with a small project and then you move on to the next. It might be a longer term or it might be shorter. I don't know how it really is in the real estate game, but if I want to buy a house from somebody, I will say, where's the other person that you sold to? Let me ask him how he's doing. For us, trust was built over time. And because you are holding people's money, right? The fact that a Piggyverse user can come tomorrow, you know, what makes me happy is that a Piggyverse user that was not able to save for something before, something that he thought he was not even going to be able to buy. People are saving for cars. Somebody that thought I would never own a car. People are saving to go abroad or to pay for their school fees. These are things that before they didn't know how it was going to be possible. And then when the time comes and they press withdraw, and they will get the alert, pim pim. That's just beautiful to see, you know. So that has been built over time. It's not something that you can just wake up tomorrow morning and then create a product and say people should come start paying. There's so many fake products out there. There's so many MMMs and, you know, what's the other one that went? CBEXs and, you know, all those many things there. If you put your money, you know, it used to happen, but it's your turn that God now used to catch you. So you have to use products that, you know, have built trust over time, and that's what we've been able to do.
All right, thank you very much. Please a warm round of applause for him. All right, so let's move to Mr. Kayode, right? How do you plan to get more real estate developers, more real estate investors, and even individuals to buy into using AI to market, you know, their products in the year 2026?
Thank you. So you've just given me an opportunity to shamelessly plug as well. I think both of them are.
So you've been waiting that God. All right, please go ahead.
So we're offering a pilot program for anyone that is interested. We're looking for just 5 businesses, and you have to have a business. We don't just want, like, you know, individuals that are running around and don't have structure, right? Because for...
So are you saying you're not targeted as small businesses?
No. You have to have structure. It has to be a business, not just an individual.
Okay.
You understand? And also, it also works best when you have, like, a constant stream of leads. You know, so you have leads coming in. You are doing marketing, not just someone that's praying to God, you know, for property to sell, right? So if you're interested, we can speak at the end of this panel. We're just offering it for 10 businesses, a pilot of the AI, voice AI systems that can help you to sell your properties, right? They can also help with customer service. Also, you have like an always-on employee. So imagine having an employee that works 24/7, right? Your messages, your DMs, everything is attended to. So people send messages. I mean, when you post your properties, people, you know, reply in your DMs. They send DMs on Instagram, on Facebook, on WhatsApp. We have AI systems that are integrated with those platforms. Once you connect your social media with, you know, our system, the AI responds to those messages. So first of all, you train it on your data. You feed it with your brand tone, how your brand communicates. You know, who are your customers? What are the you know, pain points of your customers? So it can address all of those customers, you know, in your tone, right? So it's not speaking like, you know, the way you would not speak to them, right? So if you're interested, we can have a conversation after this panel. So just 10 people. We want to do a pilot with you, and, you know, hopefully you'll be amongst the case studies and testimonials that would, you know, showcase next time we're here.
All right. Please a warm round of applause for Mr. Kayode. All right, so lastly, before we start taking questions to Mr. Shehu, we already said that, you know, 2026 is projected to be the year of data, right? We want to know, how do you also plan to let real estate developers, real estate investors to see into, you know, to take data more seriously in the year 2026, right? And to buy into that vision that 2026 is going to be the data year.
Okay, thank you very much for that. I will come in again from the real estate angle. Just after the previous panel had finished, I had a conversation with the gentleman from Stanbic IBTC. And I told him that, we could do some sort of partnership, right? I'm very, very happy that Mr. Toby is putting together this kind of event, because I'm always of the opinion that partnerships really, really matter. And, before you do any kind of partnership, the first thing that really matters is your data, right? What kind of data do you have? For example, for us, one key data that we are seeing is the credit profile of Nigerians, right? So essentially, when money comes in, how do you use money? Okay, you have so and so million of naira now that you have not used for your rent. What are you using it for? And stuff like that. Do you understand? It helps to build your credit profile. And also, one key change that Nigeria has shifted into is credit. Now, the federal government is very, very big on giving out credit to as many people as possible. We are seeing it in the real estate sector, those in the manufacturing sector, they are seeing it also. So this again feeds into the data set, right, which again builds the data that we are looking at in the real estate sector. So I think for us that, it's very, very big, especially for Nigerians. As much as possible, as you're building your credit, you're also building your data.
All right. Thank you very much. Please a warm round of applause for all of them. Thank you so much. Now we've come to the segment for questions. Anybody? We're just going to take 4 to 5 questions. So anybody with a question for the panelist? Anybody? Somebody? All right. Gotten one over there. So your name and who your question is directed to. All right. Anybody else? Actually, I got you. Anybody else? Okay, at the front. Okay.
Thank you, everyone. My name is Shaya. My question is directed to the lady at Venco. Given that Venco is essentially a service provider in a marketplace, some of the products you're offering seem to be more, I won't say competition, but potentially competition with the, estates or, maybe real estate developers that you kind of support. So I'm curious to know how you navigate that business model, being horizontal, but also maybe going into certain verticals.
All right. Did you get that question?
Yes, I did.
All right. So before you do, should we take all questions and then you answer them one after the other? I think that will be faster, right? Should we do that? Should we do that, or we should answer? Huh? You want to answer right away? One at a time. Okay. So, do you want to answer that question?
Yes, please. Okay, thank you very much for that question. So I'm going to start by saying Venco is very flexible and always evolving, right? And we are also very customer-centric. So before we build a product, we have gotten feedback from our people requesting for that particular product. Now, to go direct, to answer your question directly, we try as much as possible not to sell anything conflicting to our customers. I mentioned earlier that our customers are not necessarily the residents, right? They are the developers, the facility management companies, stakeholders. So now we have something, we have stuff on the platform. You can tell us, oh, this is contrary to, or this is a bit competing to what we already have as developers. We can shut it down for your community. So it's not like it's a one-size-fits-all that we are doing, right? I mean, there are communities that are very pleased to have access to all of those things, but we always have conversations. We listen, yeah, and we implement.
I was about to say we don't judge. Okay. All right, so next question. Okay, I'm coming, ma. There's somebody here. All right, your name and who your question is directed to.
Good afternoon. My name is Grace Divine. My question is directed to Mr. Ayo, yes. My question, people have been telling me about the platform, but I've not even logged in for once. Sorry, yeah, PiggyVest. But because I've had the experience, and the way it ended, I don't like it. So I want to ask, when there is a fractional investment, and if the property is not performing, or is there any opportunity for for the investor to come together and say, okay, we want to dispose this property? Is there anything like that you want to dispose the property? And how do you people come together? How do you inform people? Are they coming together to agree? Because that was the challenge I had. So the property, they just said they did an interview across via email, and they say they have a large number of people that said they should dispose the property. And after 3 years, this property was disposed at 25% interest. Is that not a bad investment? After 3 years, only 25% increase in this Lagos.
First of all, I want to apologize for your experience. I don't know what platform that is, but on PiggyVest, what you have is you talked about trading. You talked about fractional ownership, and then you talked about trading. Exactly. You can buy and sell. You go on there right now. Somebody wants to buy your unit. There are always people looking for units to buy because they can buy these things small. They can't buy everything at once. Right? But when I have a quick 100K or a quick 50K, I want to look for somebody who wants to sell their own. Because in no time, if I have enough units, I can own one property. So that always happens. You don't have a problem with disposing, the units that you have. Most times, you even want to buy other people's own because it's easy to trade, right? And in terms of the interest, right? If you go on there, you see the interest that is at as of today, right? So it's easy to see, easy to view. It's not an email, right? It's a product that you can see. So I would say that you should open your phone and download PiggyVest right now and join the fun club. Okay.
All right. Does that answer your question?
They now said that about 65% of people said they should dispose the asset. And they didn't get back to us how much are they disposing it. Only for them to share the interest. I said it was disposed at 25% interest after 3 years.
Yeah, so I think he has already answered your question. Because it is a fractional investment, you still have the power to sell your fraction at any point in time.
Okay, I think she is saying she doesn't want to sell. And so they later said, they came together, whoever came together without their knowledge and said we want to dispose, the assets without their knowledge. And so at the end of the day, when they were now giving out their units, like you said, it was just 25% increase after 3 years. Okay. So it's not about deciding to sell.
Exactly.
I don't know what platform this is. Yes. To sell, yes. Everybody came together. And I don't know what company that is. I really don't know, but I don't know that they should be able to do that. Okay, I'm sorry. I'm sorry.
On their behalf, right?
Yeah, but it's not us. Okay, good. Just putting it out there too. Okay.
All right.
Thank you.
Okay, so we have 2 more questions. Please, your name and who your question directed. I should take her first.
Good morning. My name is Iliola. So this question is for Mr. Abbas on AI. So earlier you mentioned that you had closed deals on using AI, and I just wanted to understand how that works with customers who might not be open to speaking to AI and wanted to talk to a person directly, as well as those who in general have concerns with generative AI. Because I know that we use algorithms like AI and algorithms already, that's conventional AI, but specifically about generative AI, especially with the issues surrounding it that have been coming up. I just wanted to understand how you navigate that.
That's a very good question. So with the way AI is right now, even though it's very advanced, some people can still discern that they're talking to an AI bot, right? So in that case, if the person says, I want to speak to a human, the system is set up to transfer the call or the message to a human, right? But in the case where the person doesn't discern that they're chatting or talking to an AI bot, it can carry on that conversation until the point where, it probably doesn't have, it doesn't know what next to do. Then it can move that conversation to somebody, or it can just grab the information it needs. So the idea is that it's you without the system, right, you're going to lose a lot of leads, right? People trying to reach you, you have so many things you're working on, you're trying to grow your business, you're trying to increase revenue. So you might have like thousands of messages in your DM, and there might just be a lead there that, wants to get that property and is trying to reach out to you, but you've missed that conversation, right? So the idea is that it will get, make sure that those things don't leak, those kind of conversations, you don't miss out on them. So it gets all their details, all the, information of that person, and then it can pass them off to you, right? So it's also, our systems are connected to a CRM, right? So all of those details, all of the transcript of the conversations that are being had can also be sent to you. So you get a notification, you get emails, you can get a notification. We also have an app, so you get the notification on the app as well that, he has, spoken to this person and this is the conversation. You understand? And you can take it from there.
All right, thank you. Does that answer your question? All right.
Does it? He's yeah. In between. Okay. Okay.
Good afternoon, ladies and gentlemen. My name is Folake. My question is actually being thrown back to the moderator. She asked a very winding question earlier, and she addressed it to Mr. Ayo. I'm not sure Mr. Ayo was the one to answer that question, because I didn't understand the question, and I wanted her to repeat it clearly for the audience to understand and for the appropriate person to answer. That's one. The second thing is, we can't give up on Nigeria, especially when we're on a platform or we're on the stage. We have to keep hoping and believing and being part of the transformation for this nation. Okay, Mr. Toby answered a question earlier, which was very positive and very encouraging. When somebody asked a question regarding the Lekki, I don't know, maybe overpopulation and all this, yeah. And, people keep forgetting development is going on. Something is happening. Is it possible for Nigerians to acknowledge at least one little thing happening? Must we discourage ourselves on a daily basis that nothing is happening? I don't work for government. I don't know anybody. I'm not, but I've always been like this since I was young, since in school. Can we please, especially those of us in the real estate, well, you are doing a lot. Bring it up out there. Let there be communication. Let people know what's happening. Development is happening. This is not how Lekki was or Lagos was 20 years ago, 15 years ago. Things are happening. I was going into Harbour Pond weekday, and then the driver just linked a road, and within 5 minutes, I was from Lekki. I'm like, what's happening here? It doesn't mean things are perfect. We'll get there. All these other nations too, but they went through some stages. And I'm really getting a bit, tired of us. America's, now the bubble is being busted through Trump. It doesn't mean they are out there or they are so, but they kept believing and kept saying this in their very positive. You get to the, welcome home, this is the best nation or the best president. Hey, so those of us that have the opportunity to hold the mic or do something or lead a church or lead a company or lead, let's just a little bit. I know it's discouraging at times, but now a train is happening going to Abeokuta, I've gone on that train. I was impressed when I went on it. Yes, it will take some time. We still need, staff. We need, so. But then going back to Ms. Praise, what was that your question? It's a bit windy, and what answer were you expecting? Thank you.
All right. So I think the question is about the red and blue lines, right? So let me take that correctly again. All right, so the question, yes, it wasn't for me. So the question here is, with the blue and red rail lines now fully operational in Lagos, we see rail-induced appreciation. That means people appreciating, how the rail has eased give it our transportation. For example, commuting. For example, I took the rail to Ibadan as well, except for the fact that I feel like the rail, the ports now, right? It's a bit far from. That's in Ibadan. Maybe currently I stay in the Road, and then the port is at Moniya. Then before I take another transportation from Money, I've spent over how much? But it was fast. There was no hold up. Before you know it, people were dropping at their bus. It was smooth. But the fact that it was just far away from, for example, the two popular bus stops in Ibadan is Challenge and Iwo Road. So I see no reason why it should be, Ammonia. So the question here is, so people appreciating the rails that is happening now, right? So the question is, are you betting on the transit-oriented development model for yields in 2026? So maybe it's related to real estate developers and investors, right? Is this transit-oriented development, right, having more rails, is it going to bring yields for you real estate developers and investors? Did I get that correctly? Did I explain the questions well now? The question well? Yes. 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 Okay, so
I don't know if there was, and I think everyone should also speak on this.
He also wants to say something.
I think that I'm very pro Nigeria, right? Very, very pro Nigeria. I'm not the type of person that would, I would live abroad and not come back to Nigeria. I'm doing everything here, right? So I have to believe in where I am. And I definitely appreciate the fact, which I said, that, I've taken the train as well. And you mentioned the question, and the question was around, is it, should I say, positive to the yield for this? And I mentioned two problems with it. Now, we should not, and I'll say this, we should not be we should be happy with development, right? But we also know what development is. We should know what development is. Just because, we should not be just happy that it's there. That does not make me anti-Nigeria. I'm happy that the train is there, but I also know, right, if we adjust the times, it will be better for people. And if we don't speak up about these things, you will just take anything. We've given you train and that's it. So we're happy that train is there, but is it really? Yes, it's positive to something, but we can go further. We can go better. And these are the conversations that we should have. If not, you'll just be happy that you're there. And they will just be happy that, oh, I've given you train. Okay. But that is not the, no, that's not the point. Yes. So we should definitely understand what infrastructure should be able to do for people, right? And that's where I'm coming from, because you asked the question, how does it affect? As a person who wants to go to work in the morning, I cannot take that train.
Because it starts 7:40 or so. Work resumes 8.
Right, work has resumed at 8. I can't take the train. So if I have a business that I'm running, right, and for real estate players, right, if you mentioned something that is very, very important, the train station is far away from, the bus stop. These are conversations that we should have. We should have stations close to where I can hop off and hop on the next bus to get to my place of work or to get to my home. If the infrastructure is done right, real estate players can come and say, the train is only 5 minutes away from this estate. They can't say it now because you still take a 15-minute journey to go to your house. right? The train is nice. And thank you, government, for finally putting a train. But the work does not stop there, right? And we have to speak out to these things. So that is my point.
But like she said, we should appreciate that, okay, development is ongoing, and I mean, it's really nice. It's making, yes, it's ongoing. All right, you said you wanted to say something on the trail as well. So we can wrap up.
All right. Good afternoon, everyone, once again. So I think I can speak from the rental financing point of view, because I know that question is more directed to us at Yalo, maybe Venco, and then also the property developers. Sorry, Venco. So for us, yes, definitely. We've seen an increase, definitely, from rental financing requests, especially from touch points. And it doesn't even necessarily need to do just with the train. We have the train, we have the waterways. So there's a waterway from Ikorodu now to Aja, and then there's one that's at Victoria Island also. So we are seeing a lot of requests coming in from this place for financing. This is around mile 2, at touch points like that. So yes, definitely it will play a big point in our end of the year yield. One thing we are really big on at Yalo is impact, right? And one of our sustainable goals, right, is to provide housing, to make housing more accessible for low to middle income earners. The other panel had spoken extensively on Lekki being overcrowded. I had a friend that was living in Lekki. Yeah, Lekki. I was paying 10 million naira rent for a 2 or 3 bedroom some years back. I looked at him. I was like, "Sir, what's going on?" But he was like, "Okay, he needed this place because he was very, very close to work, right?" But then with the expansion that is going on now with the train, the waterways, you can stay in a Mile 2. You can stay in an. We're hoping it gets towards Oshodi, and there's even one for Oshodi. You can stay in Oshodi, you can stay in wherever it is that you want to stay, Agege, and then you can get to Victoria Island, you can get to Ikeja. There's a lot of work that still needs to be done, as you have rightly said, but definitely we are seeing progress, right? And we will get there one way or the other. I think the foundation has been laid already, right? We just need to build on it. To also buttress, we've seen that Ogun State is also saying they want to partner. They want to have, I don't know if it's blue or red now, the one that will go from Lagos to Ogun, and then they will also scatter it the way they've scattered it in Lagos State, also in Ogun State. So once that is also finished, again, you can, like other panelists have said, stay in Ogun, work in Lagos, or stay in Lagos and work in Ogun State. So yeah, definitely for us at Yalo, it's very, very big for us. Thank you very much.
All right, I think Vengo wants to say something on it as well to round up this session. Okay.
Yeah, thank you very much. So I just wanted to add that today we get there is an increase in buildings, right? Residential buildings in Yaba. Why? Because it is very close to the island, right? And then the train station is it's a very good connective environment. So what I'm trying to say is, yes, the trains are there, right? But how effective are these trains? Who is collecting our feedback, right? Who can we walk up to say, or who walks up to us to say, this train that we put for you people, are you using it? Why are you not using it? What can we do to make it better, right? I see that, in fact, even prior to train stations, I used to say as far back as 2010, 11, I used to say that if trains can run through Lagos like as effectively as possible, nobody will be shouting about traffic or a lot of things that we worry about in this Lagos. So I don't know if anybody can help me answer this question. But my
You're the one on the panel.
But my question really is, how can we, effectively communicate our own concerns? We love the trains, thank you very much, but can you help us do this? Can you help us make it more effective so that we're not just using it occasionally? It becomes a
norm, a lifestyle.
Yeah,
Yes.
we know that this is a mode of transportation that we have in Nigeria.
Constant.
Yeah, and it can take us anywhere we want to go to. So.
Yeah, I don't know whoever will answer that question, but maybe in the next area. Please, a warm round of applause for the panelists. Yes. You can do that better and louder. Thank you so much, Ayo. Thank you, Ajuma. Thank you, Kayode. Thank you, Sheun. We'll take pictures right now, and then we've come to the end of this panel session. Please, a warm round of applause for them again. Mr. Ayo, please, can you come off stage for the picture? Please, a warm round of applause for our panelists once again as they go back to their seats. You can do that better for them, please. All right. It's been a beautiful time, right? It's been a beautiful time, right? And has it been worth your time? Are we going to see you in Rio 2027? All right. On behalf of AfroCrux Limited and of course the AfroCrux Real Estate Outlook Conference 2026, I want to say a very big thank you for making it to Rio 2026. We've talked about, how to amplify resilience in the real estate industry amidst global disruption. My name is Praise Ganiyu, and it's been an honor co-hosting and comparing this session. Thank you once again for being here, right? 2027 promises to be a great year. It was the 10th year this edition. So next year is going to make it the 11th year. So we want to see you there. All right, thank you very much and do have a lovely evening. Thank you. Please, it is now time to network. You want to connect with one another. Make sure you don't leave here without talking to someone beside you. Remember that it is collaboration above competition. So please talk to somebody, network, and of course, do have a lovely year. Thank you very much. God bless you.
You're like the beautiful sunrise in the morning. I guess it's everything for you, baby. As long as you there. Bad boy, when you know for you. Yeah, you know, so my love
Alpha Crocs Limited or Alpha Crocs Real Estate Outlook Conference, please you can reach out to them at info@alphacrocslimited.com. You can send a mail to that, info@alphacrocslimited.com, or you want to put a call through, the number to call is 08181. Media, please take it down a bit, please. Thank you. So if you want to reach out to Alpha Crocs, the email is info@alphacrocslimited.com. The number to call is 08181502222. And of course, they also have the website www.alphacrocslimited.com, and you can always reach out to them and then you'll get a response. Thank you very much. Over to you.